BPRs, where it's like the two overlapping
Yep.
the value gaps.
Yeah.
So wait, is that a volume balance? I can't tell.
Sometimes it's hard to
Okay, let's
tell.
just
No.
pretend there's a volume imbalance there,
Okay.
right?
Yep.
So when you use a BPR,
Mm-hmm.
say this is a 4-hour fair value gap,
Yep.
and you're waiting for price to come back into it and continue lower, would
Mm-hmm.
you have this out and then you would also have this out just in case it reacts off this?
So I'm gonna have
Like,
the closest first. So I would have that first
yeah,
one up, right, where it's just the
yeah,
civvy. And then I'm gonna
yeah,
wait and see how we react inside that. If we need if we are reacting further through and I see like we've almost closed over consequent encroachment of that first one, then I will look at the
yeah.
second one. And I'll look at more so the BPR. I'll also potentially, yeah, I'll mostly look for the BPR in that case then too. You can see that
Yeah,
the
just
main, so
judge
this
off the reaction
is
really.
where we currently are, right?
Uh,
Yeah, this is
yeah,
on the 4 hourly. So we're also inside the daily suspension block. That's more so what I'd look at.
yeah.
So also
Oh, I
take
just meant like in general, to be
in
honest.
general, yeah, 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 yeah. Yeah, I would drop whichever is closest
Wait, this isn't
first.
a suspension block.
Nah, so turn set and BADJ off.
Wait,
Now you got a suspension block, G.
wait, I always have these on.
Yeah, yeah, yeah. No, don't have that. Um, I don't think it's
Okay,
bad.
I
I
don't have
think
set.
Dodgy does it. Um, but look at them, right? So like that just looks like shit, right? It doesn't even look clean when you have settlement on. We're missing a volume imbalance on one side. You're essentially flicking between them and then looking for volume imbalances. So wait, go flick them again. I just want to see what current new week opening gap is. So current new week opening gap on this, right, is smaller on BADG and set.
Yeah,
I'm ideally looking for when you turn
yeah,
them off, you see how it's now bigger.
yeah. Wait, do you have to like do them both at the same time, or you can do like
I'll just
one
look
at a
between.
time?
I'll do like all the possible combinations of it,
Okay, yeah.
right? And then most of the time I'm leaving it on none. I typically find that to be the cleanest. So
Okay, I usually leave it
BADJ
on
is
one.
just like that's the contract month changes. So that makes
Yeah,
it look
yeah.
more like
I've
if
always kept that on.
yeah, if instead of being on continuous, you would be on the contract from what, September or
Wait, so
till
do
September.
you actually like change the contracts every time, or you have the continuous one?
Nah, so how it works is on or actually I think Tradeovate lets you trade the continuous contract, right?
Yeah, yeah, yeah. I trade the continuous one, but I know people who swap between the one every time the month goes.
Yeah, yeah, yeah.
Like whether it's September.
Most of that is other prop firms. Is other prop firms, if it's not through TradingView, it will auto switch. So like I
Mm,
remember Top Step used to only have one MNQ, and that MNQ was the contract change one. So that was
yeah.
always for
Okay. Yeah.
whichever delivery month we were in or which quarter.
Yeah. Okay. So what one do you use?
I use continuous contract, but I'll
The
also
other one.
look at the contract size. I mean, not
Yeah.
contract size
Okay.
BADJ. So by having it on,
Oh, yeah, yeah.
so
Like
I've
the
got
swap. Yeah.
essentially
Okay.
like if you look, no, I'm not showing my chart, but on my chart here, I have one chart up with the September contract that I keep a clean chart. I mostly just use that for like going across doing annotations and like explaining examples and stuff. And then I
Mm,
have one on MNQ, like one, the continuous contract. Just gives
yeah.
me extra charting space. But it really doesn't matter too much. The main thing between them all is to be looking out for volume imbalances. So whenever I
Yeah.
see,
Okay. Yeah.
say this the suspension block um, without BADJ or set on, then I'm gonna use them both off while I'm looking at this imbalance.
Yeah. Yeah. Yeah, I see.
Mm-hmm.
That makes a lot of sense. I think didn't you talk about it in a YouTube video or something?
Yeah, yeah, in the YouTube video, in the most recent YouTube video.
Yeah.
Actually, no,
Okay.
and in
Awesome.
the first one, I think. Yeah, I think it
Maybe
was
I
in
didn't see that
both,
one.
but it's good. It's good.
Yeah. Oh, I had the question about the evolving first presented as well.
Mm-hmm.
I should remember because no one else teaches it.
Well, it is
Is it
technically
like
mine and Jimmy's
something that
concept.
ICT teaches?
Nah, it's
Oh,
so what he calls it. You know Teague Hib or some shit. You've seen his videos.
oh, him. Yeah, yeah, yeah.
Yeah, so he essentially just calls what we would call the evolving first presented. First presented. It's essentially just the measure of selecting which FEG is the real first presented. So which one aligns
Yeah,
best with
yeah,
narrative and which one aligns best with where we're
yeah.
trading, whether
I've
we've gapped
actually,
higher or
I've
lower.
been using this a lot actually.
You
Regular
can
trading
also
hours?
combine it with org, right? The opening range or some
Are you
shit.
talking about regular trading hours?
Oh yeah. I watched the video. People were combining the first presented fair value gap with the opening range gap using
Oh, with opening
regular
range
trading
gap,
hours.
I think that's a good thing. Yeah, you can use
Yeah.
first presented to get on side with the opening range gap. Um,
Mm.
so let me even try find an example on my chart for you.
Yeah, I'm pretty sure there was one the other day. Yesterday there wasn't. The opening range gap was like nothing.
Yeah, minimal
On the
opening
ES,
range
I think
gap.
it was though.
So what I'll do is I'll be on regular
This is
trading hours, and I'll mark up essentially the most recent three, or at least the three that are most prominent to me. So like you can see how on EJ's chart here, that one is quite prominent because it's recent, right? So we have some form of recency bias there.
this one.
No. So the opening range gap is going to be. Let me show. Show my
This one.
screen. Okay, can y'all see? Yeah, you're right there. So opening range gap is going to be from last candle's closing price to our candle's opening price of the new day. So this one would be here,
Oh yeah.
right? And then I'm just drawing quadrants. And then from that, I'm going to see how it's respected over the next few days, right? So you can see what I'm going to use it as is a level of sensitivity. So a lot of the time we are going to get it filling this inefficiency. So this is an inefficiency. It will need to be refilled. That's why you see some reaccumulation around 0.5. Then we go to the upper quadrant, back to the low. It's filling this inefficiency before then running away from it. So you can also see how that would align with our open, right? A lot of the time you'll see, say we are at, let me go back to normal. So what I actually managed to take my trade off yesterday as well was the fact that I knew that our regular trading hours closing price, so back on, get that, regular trading hours closing price was this price right here. So if that's my closing price, a lot of the time, if we are already close to that, price may not want to leave that gap. You know what I mean? So we're gonna start to trade towards it before 9:30 open, so that we can then open near it and then just use it as a small inefficiency. So you can see we open, trade back down to our opening range gap. Essentially filling our opening range gap. If I put it in quadrants or a box, it'll be easier for you to see.
Yeah. Actually, that makes a lot of sense.
Yeah. So
There's a video on like YouTube. Yeah. I watched one by Token NQ. There's some pretty good ones out there.
Token NQ, yeah, valid. I don't know who that is, but I'm sure he's good. And then you'll see, so we've opened, we've traded through it. It's the same thing here. So we get out, you can use this or you can use other PD rates. It's really not going to make much of a difference. It's the same as your opening price here. So your 9:30 opening price is the top of your opening range gap. Yesterday we also had, this was quite clean, right, where we had this. This would be our 9:30 first presented, okay? So it's 9:30 opened, 9:30 manipulated, it's on 9:30. We then run out liquidity, right? We ran out this liquidity and we're filling our new week opening gap. I was low-key expecting it to get to the low. However, just based on the divergence, I closed because ES was starting to look quite bullish. Right, From that,
Yeah.
you then get this inversion. With this inversion, you see how we had 1, 2, 3 candles of reaccumulation, essentially prior to the inversion. I can almost consider this to be some form of breakaway gap. You can also consider this to be a form of breakaway gap when we have inversed all of these. There's clearly been no retracement in here, assuming the breakaway gap. But then also the fact that it is now no longer really your discount array. So your discount array, what I saw at the time was 930 open. So 930 open is also, well, 930 open is actually here. But 930 open aligned well with your change in state of delivery, as well as I would consider this to be your 930 evolving first presented. So it's whatever is aligning best with my narrative. So this is, as EJ said in his recent, this is a breaker swing with a fair value gap. So that'd be a unicorn model, anything within this area. And you can see very clean respect in this area. Those are our first presenters. And then we trade away from. That was essentially last night's 930 model. To a T.
Wait, so you counted I didn't even count the first one as a first present. I counted the
So,
second
and
one
that's
as a
what
first
Teague would
present.
do, right? Is Teague's not calling evolving, non-evolving, but bro, it still gets used. You'll still see, and it formulates your narrative, right? So you can be like, okay, this is still 930 first presented. It's not as prominent, right? Because it was the manipulation leg. It was 930. However, it's still going to serve of significance. Like when it gets inversed, that's still giving me confidence. Right.
Yeah.
Yeah, the dude Teague, right? He also he says that the AMD is also really important, or like PO3. You have to be able to like align price
Exactly.
to know if the first presented is like a valid entry, or if we have to wait for it to be inversed, and then we can see it's like respected.
Completely. So if you use, essentially in this case, 30-minute open, low, high, close, right? So we have that open, we put in a short-term high. This is not going to be a high for the next 30 minutes to an hour, right? It hasn't even traded into this larger SIBI, right? We've also, I need to get ES up here. All right, there we go. So it failed to even trade into the larger SIBI, right? ES, I think it put in, yeah, so we put in legit like a 1 minute SMT. We failed to trade up into this SIBI. That 1 minute SMT is not going to be a high of the next 30 minutes. So that can essentially show you that this is clearly going to be open. We're putting in a low. If this is going to be our open low, right? Everything below here is discount. You can be buying anything below the open, as this is predicted to be the low of the next half an hour, hourly, 4-hourly candle, right? So in this case, you can forecast this inversion, which is what I saw a few guys do. I'm pretty sure Timmy forecasted the inversion, is that you know that this is a manipulation leg. You also know that it is the 930 first presented, so it very well could be ran through as a judo one way, and then we run the other, with also off an accumulate, manipulate, distribute, all LRL above, right? It was a very clean run. Obviously this PA in here, not the nicest, but all in all, it was a very clean run. I personally just didn't take it because I already took the dub. And
Yeah.
I haven't been liking the RR on New York that much. Like, if you can see my trade, right? Just obviously it was discretionary. There's not the clearest entry mechanism, or at least not what you could see on the 1 minute. But obviously to me, I'll give you guys a bit of source here. This is what I saw. Is obviously we've been bearish all day, right? We're failing to break this trend line liquidity. I see us to almost need to fill this inefficiency completely with the fact that we're trading through it and we're not trading away and we're just booming away, right? We're clearly wanting to trade through. You can also see at this time, ES had failed to even trade back towards Asia low and start to fill this gap. This wasn't actually Asia low, but it was 1900's low, right? We'd failed to even fill more than like 5% of this gap. So I wanted to see a bit more of a gap fill. Also, ES looked a lot like a whole accumulation range all through here, especially with this accumulate then manipulate, right? But so what I saw was we're heavily diverged off these highs right here. So we're trading inside of this large Sibi, right? Even though it's a 1 minute Sibi, if I go out to the 5 minute, fuck, I hate switching time frames on this. We're inside of these 5 minute bearish order blocks. This is actually a propulsion block. So we swept the high, right? We had a sweep of liquidity. We then had this down close. We have this up close back into this this prior up close. So this is our bearish order block, right? See, we're respecting 0.5. You can also see that we have a propulsion block with the fact that we traded back up into it, and then we had significant down close off of. Don't necessarily use them that much, but it was just right there, so I may as well show you. But that order block was very clean. The main thing I was looking at was this largely unmitigated Sibi. And then from the Sibi, I'm seeing we're getting divergence. So when we start to become uncorrelated and we're putting in divergence, so at each of these highs, we were sort of edging SMTs. So we'd like put in a 5 minute and then trade a little bit lower, and then one would raid back up, put in another 5 minute. And then so eventually we had this run on this buy side right here. So we were accumulating. We have this run right here. And I've seen, okay, ES is failing to even properly sweep this high. We're putting in equal highs with this high. I can assume this to be a rejection block.
Yeah.
So if this is my rejection block, just seeing that we're literally binging off it on ES. ES is always very clean like this. We're very cleanly respecting it. We've swept it on ES. I mean on NQ. That's now going to be an hourly SMT off the high, because 8:45, then we have 9 o'clock open. So if I go from open, right, this is what I'm looking at. If I go from, where is it? 9 o'clock open, down close. So this is our opening price. If we have open, we've traded a little bit lower. We've left relative equal lows here. This is not going to be our low of hour, right? We've then traded a little bit higher. We're still stuck within this sort of a range, right? From this low to that high, we're still within this range. We're generating failure swings and low resistance liquidity on this side. So by failing to run this liquidity, generating relative equal lows, we also have this sort of like, I don't know, quotation marks, data wick, whereby it's just a suspect wick inside of a mostly unmitigated gap. That's also a prominent draw, so that was also a TP. We have these relative equal lows inside of another 1 minute unmitigated, and we had this primary low down here, whereby I wanted to see ES at least run London low and then 1900's low. So sometimes my main DOLs are actually on ES. Like, to me, NQ only really needed to run back down to this low, just because I wanted to see some form of more prominent SMT, or at least a deeper run into this NLOG, so that we could then run all this LRL. So based on that, is we've had open, we're reaccumulating whilst generating LRL for lower, right? We've then swept this high. We then put in what would have been an hourly SMT. So we have open, high to put in hourly SMT. We then create rejection block. You could consider our first presented to be two things here. So I was paying mind to this, right? I don't know if there's a volume imbalance on that side too. There's not. This was one Sibi that I was paying attention to, one BISI I mean. You can also see how it just gets ran through. So it is hard to consider something like this your first presented fair value gap. I was also then looking at this, right? So I'll be marking out a few, and if they don't necessarily suit my bias, like either of these, both of these are created within an accumulation range. They weren't even created to gap us out of an accumulation range. They were simply created within an accumulation range and then inevitably got re-ran through. So this one was slightly more respected, as you can see that we gap out, then we trade back into, and then that is the respect we need to then gap us to sweep this high. So then when we go to sweep this high, what's the inefficiency that traded us up to that sweep of buy side liquidity? That would be this BISI right here, right? Even though it's small, it's still prominent because of the fact that it was the one that was upon the manipulation leg that put in our SMT, that is also going to be what I've considered to at least be the potential high of hour or high of the next 30 minutes is, oh, whoops, is then there's two options, right? You can wait for this inversion with CISD, right? That's giving you a very clean offering because then you have standard deviations to target. So your standard deviations would be here. Oh, what's that not working? So standard deviations would be here. That gives you clean targets, right? So back to mitigate this unmitigated gap, right? Sometimes I can use this as targets, right? Literally just a gap fill. So I could be targeting the low of that gap to be filled because this is inefficient price delivery between this high and this low. That would be inefficient in sell side delivery. So we're going to rebalance that range at the least. And then same thing could apply down here, right? Sometimes you'll see us where maybe ES will sweep this low. We'll put in some form of SMT and Q will only trade to rebalance these inefficiencies because potentially maybe this was trapped shorts and there's no need for us to run out this liquidity on NQ. Say we already had a big SMT, then maybe we only need to run back to here, which often will align with something like a 5-minute rejection block or something of the sort. But then back to what I actually entered off is that we've had a sweep, we've got an SMT. In my head, it's potentially an hourly SMT. Hourly SMTs are also very prominent to drive us for at least quite a nice run, right? 15 minutes are good too. 5 minutes, you might be catching a retracement play. Hourly, you know that you're going to at least get a decent run. So let me clean this up again. So we have this BISI that is the same thing as this 931, right? Where it's a manipulation leg BISI to sweep liquidity and put in an SMT. I can forecast it being inversed. Also the fact that it was very small, it's not like we've gapped out, closed over this high with a large inefficiency, then potentially we could come and trade continue, right?
Wait, I have a quick question.
Yep. So I'm just rambling.
I thought manipulation legs are like only manipulation legs if they like hit a high time frame PDRA. Like I kind of
into a high time frame PDRA. To an extent, I'll consider anything where we gap out in an accumulation range a potential manipulation leg. So it might not always be. Sometimes, yeah.
Yeah, I got you. I see.
You get me?
And also, like, even low time frame PDRAs, are they like really significant? Because I feel like some people aren't like they don't show it that much. But you and like Steel and Q and like the more advanced ICT traders, you guys are using like even the 1 minute, 5 minute stuff.
Yeah, so that's gonna depend, right? So part of the reason I'm looking at this SIBI right here. So if you look in this leg, right, you really could pay attention to any of these SIBIs whereby they're mostly unmitigated. However, if you draw up, if this is our most recent swing, right? So from this swing high, where this ran out that buy side right here. So this swing low, I need to be looking for premium arrays. These are all in discount. Premium array. I don't really like order blocks that much. Also, if you drop OTE, right? So you can see we're at least somewhat respecting OTE. The main reason I didn't necessarily want to see these highs or these highs is because look at ES. So ES, this high, legit, this high, these two highs right here on NQ, swept out this buy side liquidity on ES.
Yeah.
So we're extremely.
Oh, that makes sense.
Yeah, we were extremely diverged. So in my head, this is almost a potentially protected high. ES has ran out all this liquidity. Yeah, there is the potential that NQ may need to trade to this. Probably not this, as this was an accumulate, manipulate, distribute, right? But the fact that there's already an SMT leads me to believe that this could be a protected high. We may not need to trade to it, at least until we run some form of sell side liquidity. Make sense?
Yep.
Yep. Okay. So my actual entry mechanism here was after a sweep of liquidity, and I'm forecasting a potential SMT, is that I'm looking for a rejection block. So like this is giving away way too much sauce here, but I'm looking for a rejection block right off that. And then often if I'm looking for a rejection block of our sweep on NQ, I'm looking for the rejection block of ES off the high that we're failing to sweep. So it's essentially the rejection block that is withholding us on ES from even taking this high, and then it's the rejection block created off the sweep of this high on NQ that is a potential entry mechanism for us to then roll lower. So you can see that's confirmed by the fact we open inside this, we cleanly respect it, and then we almost immediately displace away. So I actually entered on this 919 candle when I saw we've opened inside of, we're cleanly displacing away, and on the 30-second, we had a bearish ICT order block, or just a displacement candle away from this rejection block, whereby we closed over the bottom wick. I'm not showing that because it's genuinely going to give away too much. And then, and I refused to pay for TradingView Premium. And then so my entry was around here, 30-second fill, stop for the high. I'm not saying that you would take that every time, but it's more so your offering would be off this change in state of delivery, and then potentially this rebalance of this volume imbalance right here. So often we will offer some form of low risk entry, of which you can see here. I'm not sure how this played out, right? This candle could have opened, wicked higher, and then traded lower, so I can't actually give it a accurate OTE, but likely it would have wicked lower, traded back up higher to trade to 0.5. Our premium array is this volume imbalance right here. And you can see that the wicks are doing the damage. We're wicking up through our first presented, and then clearly respecting with the bodies. Also, last thing, time. So I'm claiming this macro as my own. 925 to 935 is a macro. So you can see that if I'm forecasting lower, right? But on the day, we've been trading lower and we've been generating low resistance liquidity. There is very much so the potential that I am catching the 930 Judah. So in saying that, you can see if 920, everything is open, high, low, close, open, low, high, close. Everything has some aspect of PO3. This next 5-minute candle, the 5-minute candle of 925, has a form of PO3. So you can see we open, we fail to even put a top wick on this candle, as we're clearly, this is showing me it's going to be the Judah, right? If we've opened at 925 macro, which is essentially the start of the potential Judah time, and we haven't put in a wick high, we've literally just dumped instantly, we've flushed these lows, it's essentially showing me, okay, this is our Judah, our manipulation leg out of this accumulation. So even though I said, okay, this is accumulate, manipulate, where we swept this high, on ES, it's nothing, right? It's accumulate, manipulate lower, distribute higher. And if you just zoom out a little bit, it's like, this is all an accumulation range. This is a large manipulation range, and then distribution. Y'all get me?
Bro, off of the rejection block,
Yep.
did you get, was it like a 15-second inversion or CISD or just displacement? Like, what did you actually enter on?
Let me get
The
the
market
30.
is closed.
What the hell? Did y'all hear that?
Yeah, I did hear that. I've got it on my chart for you.
That's schizophrenia type noises. Hold up, I'm just getting the 30-second chart up. There was a 30-second displacement candle. I don't know if there was a 15-second inversion, but there was like, I don't know, I'm going to post this, so I'm not going to say what it is. But there was like essentially the sequence that I'm always looking for. There's a sequence on the 1 minute that I'll typically prefer, right? We clearly didn't get it on the 1 minute. I'll allude to it, and it's essentially just whereby we respect this rejection block and we immediately trade away from it and we immediately begin to displace. It creates, if you do your research, it creates what's called an ICT order block. So there's order blocks, and then there's the only PDRA he put his name on. So I'll let you guys work that out for yourself. But there was also yeah.
I was just wondering, I haven't really like watched ICT himself. You know, I watch like these IFG kids and stuff like that.
Yeah, I don't think it's bad.
What do I have to watch to like understand all this actual ICT stuff? Like, is it the 2020?
You gotta go to the source, bro.
Oh yeah, but like, there's like 600.
Yeah, I know. Yeah. So I would say the main things I watched was how many people are in this call too. Um, okay, the main thing I watched was I would start with obviously if you've got a fundamentals, you don't need to go watch T trades. You don't need to go build that initial understanding. However,
Yeah.
I would go and watch if you want rejection blocks. You're only going to get the way that I trade it
Oh.
from me and Steel, right? That's going to be something that is specific. You're not even going to learn that off ICT to an extent. And if you do, it's going to be like a combination of PAL, ICT. It's different. For the just base understanding and how I form narrative, if you watch, do you have a notebook with you?
I'm typing this down in my notes.
Yeah, perfect. So 2022 mentorship is good. 2024 mentorship is good. 25 and 26 is something I would look through and I would see if there is anything of value to you. So look for the name of a PD array or a name that interests you that you think you might need to learn. I would also say there's one video that's really good and is quite short that's going to help you a lot on first presented and understanding that whole evolving first presented narrative. And it's essentially where I built
Okay.
that from. The video is called fuck, what's it called again? Oh, let me find it. Fuck, what's it called?
So, quickly, I did see
Yeah.
there was a 15-second version on that trade.
Yeah, okay. Yeah.
Yeah. There
Clean.
was two, but the first one got inversed.
There was also my 15-second. There was also my sequence on a 15-second if you work out what
Yeah,
that
yeah,
is.
I did see that.
Yeah. Fuck, what's it called? It's about picking the right PD raise. Oh, it's from okay, got you. It's called From Vision to Execution. So from vision
From visions to
from vision to
executions.
execution.
Oh yeah. Steele told me I should go watch the 2016 core or something. Are those solid or
I
just for
mean,
beginners only?
no, I wouldn't say for beginners. I would say more so for different aspects. So 2016 has good. You'll learn a bit of rejection block source there. I'm personally not as big of a fan of his 2016 as I'm just under the belief that like his newer stuff to an extent is going to be better, right? He had his most profitable
Yeah.
students out of 22 and 24.
Yeah. He said. Steele said that stuff might be outdated.
Yeah, I would say any of the concepts pay less mind to, right? So obviously take recency bias, take what he's recently said over the old stuff. However, I would say that he has a lot of really good stuff on risk management that you won't find anywhere else in that 2016. So there's a lot of really good stuff on like say you have a losing day, right? Or you have a set of losing days of managing your risk, how you actually need to think about a scaling program, how you need to instead of sizing up, right, to try and make that loss back, it's about descaling until you make that money back and then you can start to scale back up. You get me?
Yeah. You got any psych tips? I kind of got a funded account, but like, I low-key revenge traded that.
Yeah.
So my first account was kind of blown.
That's all right.
You got any tips?
So, did you do that in one day? It's okay.
I kind of want to just try out the trading, right?
Yeah.
So,
So
last
this
night
is your
and then,
first
like,
time
today
trading
morning, I
on
was
a
just
yeah.
yeah. I entered in with like NQ contract on a 25K account, right?
Damn.
I was like, oh my god, I'm making 100 in like a couple seconds. And then I got chopped up, bro.
Yeah.
Yeah, that's actually fun.
I'd say first things first, you gotta be on MNQ. So get the minis out of
Okay, yeah.
here. No minis.
Yeah, got you.
Second thing is next eval. All right. Have you been paper trading?
I paper traded for like a couple months only.
Okay. So you've already done that, right?
This is my first eval, yeah.
Yeah, I don't see a problem with you going on evals now if you've done that for a couple months. I'd say
Hmm.
get an eval with no monthly rebill. So I think
Like
Lucid,
Lucid, right?
hey,
Yeah, I got the Lucid 25K.
yeah. So Lucid has no monthly rebill. Perfect. I'd go Lucid 25K, and then I would literally trade one micro. I would trade one
Okay, I'll
micro
do that. Yeah.
and limit yourself to that. Every single day, do not scale up. You trade one micro until you have at least built over your buffer. So you've at least made $2,000. Then maybe you could scale to two. I would ideally recommend you use one micro and you try passing an account with one micro. There's no time limit on it. There's no rush for you to do it. If you can pass an account with one micro, then you can likely start to scale up or at least build allocation, and potentially seek that payout, right, by scaling up a little bit
Yeah.
slowly over time. Um,
Oh,
Main thing would be starting with risk, right? So you just want to essentially spend as little money in the learning phase as you possibly can, right? It's going to be less demotivating for you. You're going to induce less psychological toll because you're going to be putting yourself in less debt. You're not going to be thinking of trying to make money back from these firms. Like, you're in with very little investment. There's no pressure. There's no psych, right? Ideally, you want to keep as much of the psych out of it by reducing the small mistakes early. So by literally just working on risk management is a very big thing. The other thing is in your trade, at least for a while, no manual intervention. So no closing it early. No.
Yeah.
I probably wouldn't even move your stop break even unless you're confident with that. I wouldn't be closing trades early. I'm okay with getting partials off early, but I wouldn't fully close a trade early. And those are the sorts of things I would do because that's going to allow you to build data, right? Because you're at least following some form of system and you're letting as little human error at play as possible.
Yeah.
Okay, does that help?
Can I add one piece actually that helped me a lot?
Yeah, throw it, EG.
Yes.
So the biggest thing for me, right? Because before I ever got my first payout, I think I blew like a fair few accounts, and obviously I wasn't really like super good at trading, but I probably knew enough to be profitable, right? And I would just like revenge trade, or I'd be like I'd have like that thought. But the thing, I feel like every person needs their own reason why they're like doing it. So what I think every time I lose a trade and I want a revenge trade or anything like this, right? I just go, why am I trading? And I go, oh, so I can look after my loved ones, like whatever your reason is, right? And
yeah, I got you.
If that reason should be bigger than what you're gonna do, like ruining it, you know? Like there's always a next day trading, everything like that. So if I'm about a revenge trade or anything like that, I'm just go, no, I'm not going to be able to look after my loved ones or whatever, or make a good income if I can't even manage my emotions after a loss or anything like that. So you're going to have your own reasonings and whatever, but
yeah. And I'd say that mine as well is something very similar to EJ's. I'll sit there and I'll ask myself, how am I going to get there? How am I going to get to where I want to be? How am I going to be the trader that I want to be, right? And you just put yourself in the shoes of your future self. How do you want to be trading for the rest of your life, right? If you want to make this a career, how do you want to go about that? Do you want to be over trading? Do you think that even before a trade that you enter right now, you sit there and you think, okay, is this the type of trade that is going to get me to where I want to be? Is this within my system? Does this follow my rules? Is this a good setup? Do I agree with this on a discretionary basis, right? And those sorts of things, stacking those is going to help you be like, and think with a clear frame of mind, right? The one thing you have to avoid is ever thinking about the outcome. If you lose, if you win, if you think about the dollar value, it's going to go bad at some point. It's
Yeah.
just about following a system.
Yo, thank you guys. Yeah, thanks.
Of course, the psych is easily the most sort of subjective and hardest thing to both explain, and it's something you really will go through yourself, and it's your own sort of journey. But
It's overlooked.
those sorts of things will really help you. Yeah.
Oh, by the way, I wanted to ask, do like you do you like have even a model?
So I
Or
do,
like
right?
do
I don't.
ICT traders of that level just take whatever they see is cool?
I mean, I've got a model. I don't trade the model, but I understand it, right? So I technically do trade the model. So essentially, I'm looking at it now. It's on my wall. Is this the same thing that I send to people, right? I literally send people the exact same thing that I use. Are the time frames in alignment, right? These are sort of general
Yeah.
open-ended questions that are going to be like, okay, is it even worth you sitting on the chart right now? Should you just get off right away? So it's,
Mm.
are the time frames in alignment? If it's no, it's like, why are they not in alignment? Is this going to be a high time frame SMT? Are we diverged at a prominent area, right? Then I'm going to go,
Yeah.
is it even a good time to trade, right? Is price accumulating? Are we expanding? What has happened over the last few hours? Like, if we've just had a hourly, 4 hourly expansion candle, right? I'm going to be a bit more hesitant. I might think there's a potential we need to reaccumulate now. Is it a key open?
Yeah.
Those sorts of things. Right, I'll run you through the whole thing. Then next, are we on the buy side or the sell side of the curve? So I'm thinking about market maker models. From that, which stage
Yeah.
of delivery are we in? So if I can identify this to be a market maker buy model, right, whereby we have accumulation, we leave the range, low risk, I'm framing all these sort of things, right? If this is our low risk, by the time we get down to here, we sweep this liquidity, only then am I starting to frame, okay, we might have now flipped. So I need to be able to frame the narrative of like, this is original consolidation or accumulation. We leave, we have low risk. I need to be able to pinpoint each of these stages. So then say we leave the range, right? We come back up into this inversion fair value gap, which is also a breaker swing. No, which is also a bearish order block, right? So we have a bearish order block and
Yeah.
a clear IFEG, which is also a 30-minute first presented. So this is a 2:30 first presented IFEG. You can see.
Wait. Aren't first presented at New York Open only though?
Nah, so, okay, this is a little techist for you. So
What?
the fact that price is fractal means these
Uh-huh.
concepts apply on every single time frame and at every time. So
Mm.
this is the sort of matrix unlocking that you'll get, is that every hourly candle, every 30-minute candle has a first presented. It's the same as the reason it has an open, high, low, close. An open, high, low close is
Yeah.
also going to use that first presented. So if this is my 30-minute candle, right? My 30-minute candle opens right here on my cursor. This is 2 o'clock.
Yes.
We've opened. We've put in a short-term high. We've traded. We're sort of back. We're sort of in this range right here. Not really leaving a range. If I go on ES and I see, okay, 2:12, same sort of time. This right here is my first presented from 2 o'clock. So obviously we have this one, we have this one. You could consider those first presented. This is going to be my evolving first presented because this is the one that's traded over here and we swept this liquidity. We also swept this liquidity on ES, which was, we had equal highs. So someone actually also asked me, I took this trade yesterday too. This is 2 o'clock. We'll get back to my whole 2:30 thing, which is here in a second. So this was 2 o'clock. We're accumulating right before open. ES. A lot of the time I'm using ES as the draws, right? I don't like, if I'm to be bearish, I don't want to see ES leaving these equal highs here necessarily. I would rather see us sweep the equal highs, put in an SMT, which we did, right? So this is some form of CB. This might be out at least here, right? So I look at this high right here. What the fuck? Why is this? Yeah. So this high right here has put in an SMT off this high, and this high had also put in an SMT off this high. So we're spam diverged. you can see how far apart these are. So we're up an extra like 10 handles on ES, which is a decent bit, whereas we're not even really that close to this high on NQ. So we're spamming divergence topside. So when I see this, right, and then I see we have this essentially double divergence, and then we diverge again off this high, this is confirming that this is potentially our protected high, and that these divergences are showing me, okay, we don't want to trade to this high, at least on NQ, and we're spam running it out. So we're running all this buy side, we're constantly jabbing higher, creating high resistance liquidity. So when we're very diverged, this is all high resistance to me. So in my eyes, this is potential protected high. This is also a potential protected high. Then, okay, so if I'm trading this London Open on ES, this also might be our protected high, but there's still the potential, because throughout these last few jabs, ES has been running the highs, NQ's failing to run the highs. So you can see ES runs, jabs these two equal highs out, trades into what on NQ is this large SIBI. So I can see we should have had some respect here. We didn't even need to trade into this SIBI. That is completely okay. I can see that we've put in this SMT right here. This was this SMT right here. This was if this is 1 o'clock, now 2 o'clock, that was going to be an hourly SMT. Same thing, right? Hourly SMTs are typically going to drive us quite a decent way. Steele will almost only hop on the chart if he's on his phone, right? And he looks and he sees, okay, we might have an hourly here, at least somewhere that is considered to be prominent. So if this is going to be an hourly SMT off open, I also like the fact that this was a clear draw on ES, right? So the hourly high almost needed to be ran on ES prior to us running lower. Whereas on NQ, it didn't necessarily need to be ran. We had some form of sweep of liquidity of these highs inside of this SIBI, whereas on ES it left equal highs. So I need to see that right. There was also a wick with no high in here. You can see we trade back to this rejection block. Right, and you can see we literally perfectly respect that rejection block. From that, let me go back down here. So this is our open, right? This allowed me to catch pretty high R2. Our open, we manipulate higher. This right here, you can consider this to be our first presented fair value gap. What you can also see at this time is that we left relative equal highs on NQ. One thing I'd say, right? So even though here we swept out these 5-minute highs, I like to see NQ still take some form of liquidity. So maybe we get double divergence and maybe ES doesn't sweep this and NQ does. That's okay, right? That's confirming with more divergence. By leaving relative equal highs here, I don't want to put my stop for relative equal highs, right? There's also no top wick on this displacement candle lower. This is a nice sequence that I like to see, right? Where we have displacement over this inversion. And it mechanically is something you could just cop a loss on, right? And essentially re-enter when we have here, and you're going to make it up with the RR, right? But if this is your first presented, right, then we down close over it. Now this is our first presented that's been inversed. I think we put in some form of 5-minute SMT, if that's our open. So there was really no prominent SMT off this low. We've come back into this sort of range. We've then re-swept the high because it didn't want to leave relative equal highs. Also, if this is an accumulation range right here, so if we consider this whole thing to be an accumulation range, there's going to be accumulate, manipulate. It's a lot of the time not going to instantly redistribute. Also because it failed to really leave this range and sweep more than just this liquidity. So I like the fact that it had that second raid. I also like that now after that second raid, that's smart money reversal into more prominent liquidity. All right, from that, you get this. So this is what I liked and what I entered off, is we have this rejection block, whereby you can see respecting the low of it, we trade up quite far through it, but you can see on the 15-second and 30-second time frames that we're respecting these quadrants. So that's what's validating this to be a rejection block to me. I also like 1 minute divergence in this sort of case. So whereby, even though I'm never going to take a 1 minute SMT as my entry mechanism, there was 1 minute divergence off this high. So we're confirming even more divergence, whereby ES had swept this rejection block high, NQ failed to. That would mean the rejection block on ES is both respecting this and then creating it off this down close. And then on NQ, it's off the other high that we're then respecting inside of, if that makes sense. And then, okay, this is another piece of advice that's good, right?
Yeah.
This is our open. Is this going to be our low of the hour? No, there is no form of SMT. We ran legit no liquidity. This would be our only prominent liquidity, is this liquidity inside of a PD array. This is nothing, right? This is inside of a
1 second.
Hey?
I know people say liquidity inside of like a fair value gap, right?
Yes.
They call that internal higher intermediate higher, intermediate low. Is
So
that
I would
high
more so
resistance
call
or, like,
these
low
internal
resistance?
rather than intermediate. So an intermediate high is going to be something like this, right? Where we've rated liquidity over to the left and we have a swing high over to the right. So it's essentially like a smart money reversal pattern. An intermediate term high is something that might be held for a intermediate term period of time. I don't know. Yeah,
Got you.
it's for a period of time. So that's more so what you're considering long-term, intermediate term, and short-term highs. So this is more so either going to
So
be
wait,
yeah.
yeah. Is this like internal, whatever you pointed out? Would that be considered high resistance or low resistance?
So internal, this can be considered to be high resistance to an extent, right? Because it's a rejection wick outside of this CB.
Yeah.
However, when we trade down here, I'm assuming that this is not going to be our low of hour, right? If we put in a 5 minute SMT, then maybe you would consider, okay, there's potential we come and run a little bit higher, right? But the lack that we put in an SMT and we created failure swings. So by this low trading very close to this low without taking it, that's creating a low resistance liquidity failure swing. Even then when we put this jab, creating more failure swings. So failure swings is what is low resistance liquidity. You can also see so things like this, all of this through here, at least after this run, this was all failure swings. We're failing to sweep our prominent buy side liquidity. We run lower, fail, run lower, fail. This potentially high resistance liquidity whereby we swept out these highs to the left, and then you can see this would be an intermediate term high. So in this case, these low resistance, that's a short term high that hasn't swept any prominent buy side to the left. However, it has traded inside of a CB. So short term highs and short term lows are likely to be highs or lows that have traded inside of an inefficiency without sweeping higher time frame liquidity. So back over here with our first presented here. So if we've had this SMT off the high, we have our rejection block, we then get displacement away from. I then entered off this displacement away from as I'm forecasting this inversion right here. So from this, if this leg right here, let me get rid of this so it's clean. And I'll get rid of this too, but this is coming back, right? So this right here is a suspension block. We have a volume imbalance on both sides.
Volume imbalance.
That's one thing that is helping me consider this to be our potential evolving first presented. If this is our first presented, then we have inversion over. You could consider this too, right? However, in terms of our narrative, neither of these necessarily aligned with our narrative. This first one could have. I do see it to be an acceptable loss if you took a loss on this. However, no top wick on the high is not necessarily a good sign. You're often going to see a run of this prior to a run lower. So when we get
Is
this...
that like the devil's wick?
The devil's wick? I don't know
The
what that
devil's
is.
mark or something? I remember...
Oh yeah, I've seen someone say that shit. Yeah. Yeah, you could call it that, whatever you want to call it. No wick on anything is going to be some form of draw. So you can see last week, if you saw last week's new week opening gap, you saw that on Monday, the reason that we came back to that new week opening gap on a Monday, which isn't always the case, is either when we leave 300 handles worth of a void, right? Or what we did in that case was we had no wick on this low. So there was no wick on this low with a massive void. Whereas here, we at least had a wick on the low, we ran it. That's what allowed us. This is essentially 2 drives into this inefficiency. On this drive, we also put in an SMT. That's what allows us to then run to this high. This is all framing the narrative. Off that too, though, this was an accumulate, manipulate to run this high, distribute lower, right? So you can also take things like there would have been a 5-minute change in state with, you can use standard deviations, but I'll get to that in a sec. Let me go back to here.
Can I add something real quick?
Yeah.
So if you want to go to my screen share,
Yeah.
I think he was asking about high resistance and low resistance because he was confused about the target, right?
Mm-hmm.
So
Yeah.
are you on it? So say here we sweep this buy side into a high time frame PDA. That makes this a high resistance like point right here, right? But it's only high resistant until it meets its objective. So
Exactly.
say this PDA is the objective, the next draw on liquidity. Once we hit this and we come off of it, then this is no longer high resistance, as we have a reason to actually come and revisit it.
Exactly.
Makes sense now.
Yeah. You can apply the same sort of logic with SMTs too, right? Is so say we have an hourly top side. If we then get an hourly bottom side inside of a prominent PD array, you can begin to start to form a narrative that invalidates that top side, and there is then potentially a reason for us to come run that again. So it's the exact same logic as here.
Yeah.
So if I go back to this, right, if I entered off this displacement candle lower, and I'm assuming we have our first presented here, this is our first presented suspension block, right? It's the first suspension block that was presented following the hour. It was also the inefficiency off the end of the macro. So you can see macros will tend to rebalance or seek inefficiency. The other way to consider it is that it's essentially when smart money is looking to be entering. So around the end of a macro, macros are often going to offer like either an SMT inside the macro is good, or it is either going to start displacing and running to your form of liquidity. If you've positioned yourself, say, early in the macro, then the later end of the macro may run, or the whole macro is going to offer like offerings, right? With, in this case, we've started to accumulate through the macro. We then manipulate it off this high, and then by the time the macro ends, then we begin our distribution leg. So if this is our first presented suspension block, I'm forecasting the inversion of, but then again, this is often what can happen with suspension blocks is they may need a bit more of a fill, right? So we may need to reaccumulate a bit more because it is such a large inefficiency. So you can see we get back down to this volume imbalance here, and we start to reaccumulate in the volume imbalance. Right. When we finally have inversion here, so we offer our low risk here, right, with this. Get this shit out of here. We offer our low risk inside of OTE here, upon this being our short-term leg, then this run back up in here would be our low risk offering. When we have closure below here, then I'm considering both this to be my first presented evolving inversion, and this now becomes what's called a reaper. So this is a reaper because we've had a BISI, right? This BISI was then inversed with change in state of delivery here. So this swing right here is now a bearish order block. This whole swing right here is now a bearish order block, or at least this part is, at least this part would be a bearish order block with this up close right here. When we then close over the high, this then makes this down close right here a bullish order block. Is this making sense?
Yeah.
Okay. Then when we down close back over, this swing becomes a breaker swing. So this is a breaker block whereby it was a bullish order block, and then it has now
And
flipped as we've closed over, and it is now a breaker block. So a breaker block aligning with an inversion is going to be what's called a reaper. So the fact that this inversion lines up inside of the breaker block is my reaper, which sort of tells me, okay, our first presented is also a reaper after our smart money reversal. I could get my fill back up inside of this when we retrace by failing to sweep this low. So you can see when we get all the way back down here, we failed to sweep this low. We left failure swings, and then we come back up, provide retracement back to our opening price and back just above our opening price to our inefficiency. You can use opening price as a means of discount and premium too, right? Same reason that people
opening
use
price as midnight price.
same as midnight,
Like
right?
midnight?
So people use midnight
Okay.
and daily open, so 18:00 open or new week opening gap as a point of discount and premium. So of each hour you have a form of discount and premium with its open. That's why Powell uses 10 a.m. key open. 10 a.m. key open applies for any hour. You can apply his model on every single hour. If there is a key open, you get some form of rejection block off the open, and he's using PO3, right? So he's using open, using high, rejection block, and then he's entering off the rejection block. Based on open, knowing that he's trading within the high of the hour and then distributing lower. So if I draw up...
So he's trying to get like the top wick.
Exactly. He's just catching right at the high. Same thing, if I just draw up OT of this swing, you can see the main things that I was looking at here is we've created another suspension block. So this whole thing right here is going to be a form of suspension block. Because it is more volume imbalance than fair value gap, it can do things like this. So this would be a mohawk, whereby we've inversed it technically, but we've only inversed it to trade up to this rejection wick. So this is a rejection wick as it was our prior low risk, right? And it's clearly traded up in, and we've rejected out of with strong displacement. You can see very, very clean, right? We trade up to 0.5 of the wick inside of our 2 a.m. first presented, which is now a reaper. That's also at the 0.62 level. And you can see that because, so volume imbalances are weird, right? Every other PD array, when it gets inversed, there's the potential that it flips. Volume imbalances don't necessarily flip as much. An inversion of them is often to rebalance this inefficiency. So a volume imbalance is very inefficient in price delivery. It's a full like void to an extent with a wick in it, right? So they can need to be closed over to rebalance before us then trading.
Fully rebalance.
Yeah.
I was just wondering.
Yep.
So I know you said this is high RR. I've also heard like Steel and Q say this is also high win rate or like high probability.
Yeah.
So how does that work? Because like,
I
thought it was like inversely proportional.
No, so it's not inversely proportionate. So you can have a high win rate and a high RR. It's gonna take you more learning. That's what it's gonna cost you. More learning.
Got you.
And
you learned all this from ICT, or like did you make it on your own?
No, so I learned all of these concepts off ICT, right? But when you get really deep into ICT, it starts to click in the sense that the fractal nature of it starts unlocking, whereby you, even though he might say, okay, this is 8:30 first presented, you're like, okay, why is it just 8:30, right? Why is it not every 30? Why is it not? And it is. He's just dumbing it down to explain, to make it easier for people to understand. And a lot of these things that he says, he is essentially alluding to. So he doesn't always like give you the answer right away, but it takes a little bit of figuring.
I've heard that a lot, that he like hints to it, but like
you
have to go deeper in yourself.
Exactly, right? Like he's not going to give you, he could literally give it on a silver platter, right? Like I'm sure if he sat there for an hour, he could give everyone a win rate that's 100% with some bullshit model that is such a high hit rate. But I guess you wouldn't learn the same if he did that. So it might not give you the same result. So this trade here was...
How long have you been learning ICT for?
2 years
Are you like
now.
his first like one? Oh,
So
okay.
maybe a year and a half, 2 years, just on ICT. Before that, I was only trading ICT concepts. Like I started by watching TJR before the whole.
Oh, Canon event.
Yeah, when TJR was still unprofitable though, he was like still making those. Was at the time of him making the mentorship, and
Wow.
so I learned off him. I got into crypto, got binned in crypto, and then started learning ICT concepts. Because I realized that what TJR learns is just dumbed down ICT concepts that he's learned from someone
Yeah,
else.
that's what I was thinking.
Yeah, it
Like
is.
I looked at I looked at like X or Twitter, right?
Mm.
And I was like, how are these guys top ticking and stuff?
Yeah,
And I
yeah.
was like, there's way more.
There's more to understand. It is possible, like that top tick and shit. That is discretion, though. A lot of that is very discretionary. That's you've seen. So a lot of Steele's entries, right? I'll use discretion to an extent, but it's still quite mechanical. Um, and
Yeah.
Steele's is the same. Everyone's is the same, but it's your own formulation of what's giving you confidence. Um, and yeah, you build a level of discretion that other people can't necessarily see, and that's going to be personal. So your discretion might be your ability to trade IFVGs, right? And that's what Dodgy's discretion is, that he can trade IFVGs really well. Some people just formulate strategies whereby they like higher RR, they like different forms of trading, and you pick something that works for you. So if you like trading higher RR
Have
and
you
you're
watched?
willing, you are going to cop a slightly lower win rate, right? It's bound to happen. If you're trading higher
Yeah.
every time, the best way to trade ICT is to be able to be situational. So you're applying certain concepts when they seem to apply best. It's the ability to,
Yeah, yes. Yeah.
yeah, pick the right PDRAs
Like
at the
mix and
right time.
match.
Exactly, when you need to, right? So
So
sometimes I'll
do you
trade,
also watch like
yeah,
do you also watch like Bionic NQ and like
Bionic's good.
Reese NQ?
Bionic's good.
Bionic's good?
Yeah, I would watch
Okay.
Bionic. Bionic's really
I
good.
bet. Yeah, that's what I'm on right now.
So, but the thing with
Yeah,
Bionic
I was
and
watching
PB
him.
is
Mm-hmm.
you're gonna get a very good mechanical understanding, but they're not the most discretionary traders in themselves. So
Mm,
they're very good to learn off, but it is something that you don't have to be as mechanical in that sense with. Obviously, they using discretion too, but
yeah.
I don't like
Yeah, that's where I
trading low
started, to be honest.
RR IFVGs, so I just don't trade that way.
Yeah, I
Yeah, I was
started
looking at
that way. So I think it's good, but a lot of it's repackaged and could be done differently. And
Mm,
I've started to actually change the differences that they've repackaged, and it's been a lot better.
exactly, and you only do that necessarily once you've understood what they're talking about.
Yeah,
I
yeah,
think it's a
until I've
really good
completely
place to
mastered
start.
it.
Pardon?
I said once I completely mastered it, I got bored, and then yeah,
Exactly,
I
right?
got a mate who I've told to just master it, and then he can go to the next thing.
Yeah, exactly. I think it's good. I think an IFPG base is actually a really good base. Um,
Yeah,
because you'll see sort of the other offerings that happen before it, and you start to build that discretion of, oh, okay, I actually could have taken that, and I know that this, with this set of confluences, with when this happens, and this happens, that the IFVG happens. So why wait for the IFVG when I already know that it's going to get inverse and I'm going to get a better fill if I enter now?
Mm,
You get what I mean?
yeah.
Yeah, my thing with not trading inversions too is, bro, it's hard to go break even. Say you took this
Yeah,
inversion,
yeah, exactly.
yeah, right, like, and we edged
Like
this, a lot of people
Dodgy
will go
himself
break even.
says he has like yeah, Dodgy says he has like a 90% win rate. I was looking
That's
at some of his
absolute
videos, right?
bullshit.
He he technically does, but like it's like more break even than I've ever seen.
Yeah, his break evens are crazy. Because so
because
his
it
rule
is
with
break.
break even. So essentially, this trade last night was an invalid trade to him because this high right here is his break even swing, and it's the fact that by the time we inversed all these IFVGs, we had already hit his break even.
Yeah, I saw that video.
So he still took it discretionarily, but yeah.
you know, a lot of the people have actually been good. Like there's one guy called like Tiz Trades. He makes like
Oh
really
yeah,
Tiz
yeah.
is good.
I like his
There's actually a
videos.
bunch of good people out there at the moment. To be honest, the one that I've been liking the best is Teague. I think Teague is probably the
Oh yeah, T.
Teague's
I'm pretty
almost
sure
the
he's like a
rawest
real
form
ICT guy.
of ICT, and he's quite close to what me and Steel are. And yeah, he's pretty similar. I like the way he trades. Yeah.
Yo, wait. Do you and Steel only do like Instagram reels? So should I watch those?
Yes, watch all of mine Steel's
Okay,
reels. Even though it's like don't watch reels, it's brain rot. Our reels is not brain rot. Watch that shit.
Yeah,
Or,
okay.
You can just sit
I've
there
been
and doom
scrolling
scroll the
Steels
reels.
and
Yeah, go.
Yeah, I was doom scrolling it a couple of days ago, but I was like, oh man, I actually have to take notes.
Take
'cause I'm
notes.
forgetting.
You have to. Yeah, take notes. Take notes.
Yo, how are you guys?
Oh, it's good,
It's good,
Bruno.
it's
How are
good.
you?
Yeah, good. I'm just in that call during work, so it's
Nice,
Yeah,
bro. Snuck in.
I was just looking at NQ,
Yeah,
and
throw up a
there's a
question.
question about like quadrants and octants is what ICT is calling them.
Yeah, I'll whip them up.
I just have a question on NQ just now. It kind of price like tapped off the first octant, like in that 4-hour fair value gap. So I was wondering if you if you knew like the logic behind that.
Okay, I'll
I
get it
don't
up for
really
you.
quite understand.
Yep.
So like if you fib the whole 4-hour gap,
Yeah,
hit the,
okay, yeah,
first
I got you.
octant, which looks like, oh shit, it tapped that line. That must mean something, in ICT's language.
So here's what I'm looking at. Right? If this is our 4-hour Ibisi, quadrants are good, octaves good. Main thing I see, failure to even run to it on ES. So failure to run to it
Oh yeah.
means anything inside here is, until we sweep it, is discount to me. I can buy anything in that. So when I see that we've traded into it on NQ and not on ES, and then I see further divergence. So if I see we've also created divergence off this low. So ES is failing to even trade to this low, of which is a 5-minute rejection block. Right, so I dropped octaves of that. Very, very clean. You can see we're stopping at the high, wicks are doing the damage. I like when it does this shit too, right? So we've closed on it, we've then opened inside of, then we displace away. A lot of the times what we can have is, say we've only put in one low inside of our rejection block. There's no smart money reversal off that low. Yes, there's displacement away from, but that's not enough for us to then come run this. You can also see that off here, at this time, we had barely swept this. So yeah, we sweep this and we get rejection. Same thing, we swept high time frame liquidity in a high time frame. We've essentially swept the low into a 4-hour unfilled, but there's no smart money reversal off the low. So if this is our 5-minute low, then you wait for smart money reversal, which also gives you a clean change in state / breaker swing with an inversion, right? At the same time, we've ran out our liquidity inside a rejection block, which I really like to see. So I like when we have a rejection block and then we're raiding liquidity inside of while still respecting the rejection block and then creating more divergence. So we're spamming divergence. ES is telling me, right? It's rejecting off this. There's at most potential that we take this low, but there's really no need for us to run all the way down here, right? At least with how diverged we are. So I'm seeing that, okay, if we're trading inside the 4-hour Ibisi, we're expecting it. We also have this accumulation range right here, all accumulation here too. We've accumulated, we've manipulated off open. So open, put in a high, this is going to be an hourly high off 20.00. And then we've put in a 4-hourly SMT. You can then assume that at least we're going to run this high, and on NQ it was at least going to trade into this 5-minute unmitigated gap, which you can see I think we did, or we will. Yeah, so we put in equal highs. So those are my draws to then potentially, like, I would cut it there, right? So as soon as this gets swept, I don't like the equal highs, but when we boom that and we sweep that and then we sweep this and trade into here, that's this whole narrative done for me. Then I'm on to analyzing what's the next potential narrative. So our two potentials from here would be to either...
Sorry.
Yep.
Sorry, did you mean equal highs on ES?
Yeah, so see how we've got equal highs? Yeah, sorry if
Yeah.
I mixed it up. Equal highs on ES.
Oh yeah, okay. Sorry, I was looking at NQ and I thought,
Yeah,
oh,
bro,
man,
sometimes I do it, I
yeah,
don't even notice. And I notice when I watch the other video back, is like, I'll like say hi when it's the low and shit like that.
yeah, all good, all good.
Because I'm just fucking spitting. Yeah, so did that make sense? It's mostly the 4-hourly SMT and that divergence that is. So yes, we are inside a 4-hourly BISI. Yes, it is in the quadrants, but I need more than just that. I can't just be like, yo, EJ's stimming.
Yeah,
What's this
right,
guy
right,
doing?
right. In that case, would you take in that ES long or not really?
No, so you could take this long on NQ, right? So once I've seen this divergence, the only thing I don't like is see how of this low, look how generated this is. Like
Like low resistance.
super generated run. Yeah, it's creating low resistance liquidity. So rather than sweep liquidity V shape, right? V shape, and then we start to displace, it's chopping around this low. We're creating low resistance liquidity. If you looked on the 15-second or the 30-second, it'd be like a very clean, like make a sell model to this low. Also the fact that you have to now think
be the original consolidation.
Right? Exactly right. You have to now think, okay, ES has put in equal highs or will run our prominent buy side. So this is the buy side I'm looking at, right? Once we negate this buy side, I don't necessarily need to see this taken on NQ because NQ already ran out all this buy side to the left, whereas ES didn't, and ES left low resistance liquidity with relative equal highs here, relative equal high here. So ES has the need to run that. But then once you see, if this is protected on NQ and we trade up into here, what have we left now on the other side? Is now we have relative equal lows, a 4-hourly unmitigated gap, and more relative equal lows on ES. So now I'm essentially using the fact that we've swept liquidity on ES and that we now have draws on ES as my narrative builder. So even though NQ is like, oh, okay, this could potentially be high resistance liquidity, we jabbed out, right? Not necessarily. We have more relative equal lows here, some form of accumulation, more low resistance in here. And the fact that we've created a large distribution swing, we've then accumulated off it whilst putting in divergence off the high, I'm then going to be looking for more so a rebalance of this inefficiency. You can also see that will be used later is that we left relative equal lows with this 1659 low. So this was pretty interesting to me, and sometimes I like to see this be a form of liquidity swept, whereby it's essentially the wick low prior to our NWOG. Because obviously if this is a whole inefficient range, there's no buy side delivery through here either. So that's why I often like to see this low get swept. You can also see that this low is more relative equal lows internally here. So these are the sorts of things that I'm looking for. Did that help you, Bruno?
Yeah, that makes more sense.
Makes sense? Okay.
Yeah, I kind of thought last night we'd actually sweep that low.
You thought that we would sweep that low last night? I saw the potential too.
Yeah.
You know, I was actually targeting a full fill of NWOG, right? I ended up closing when down here you can see.
He has swept like 2 second lows.
Exactly.
At that reversal.
So my main thing, right, was yes, this is potential, but it's not high probability. And it was the same with this low. It's potential, but you can't ask for that. What I was asking for out of this whole run was not even necessarily a fill of this. For me, it was, I need NQ to sweep this low. But the main thing is I need this low resistance to be ran. This has to go, right? I need to see a fill to at least some percentage of this gap. So once ES had swept that, and you can see it swept it off 930, whereas NQ was creating a bit of divergence. So NQ was trading lower, whilst ES had already made its run. ES was also the one with relative equal highs, almost equal highs, and a bit more of a cleaner accumulation. So this was an accumulation with a small raid of liquidity, whereby that ran us lower. This was accumulation legit manipulate straight out of without a raid of liquidity. by putting in equal highs actually, so that once this started trading higher, once we're correlated, so if we're diverged, right? We're diverged bearishly, but I can see that ES is looking to start trading higher. I also see the potential of this being an AMD. As soon as we start to re-correlate, so you can see almost here how ES is pretty much inversed and we're starting to respect this rejection block and we're starting to create bullish displacement candles. That's when you can also almost assume that this is now potentially a flip. So we were diverged, but now we're re-correlating bullishly. So now we're going to start moving together on the buy side of the curve. Make sense?
Yeah. That's a bit.
Yeah.
It's okay.
Yeah.
Are you recording this?
I am recording this. I'm recording this.
Go back on notes later on.
Yeah. Good idea. So yeah, I'm actually gonna just spectate over here one sec. You'll probably see what I'm talking about play out. You guys have any other questions in the meantime? What about K? What's their name? I can't see their name. Yeah, K dot dot dot. I think they're just spectating. Yeah, Bruno, do you have any other questions? Or I can just start running over other stuff. We can even just do this live.
Oh, actually, quick
Yep.
if you got like on the 1 minute time frame, because it's such a small time frame and you have like relatively equal highs in like such a short span, like let's say like 10-minute gap, is that still classified as equal highs?
Yeah, so
Like as a prominent drawn liquidity?
I get what you mean. I'm gonna look at whether it's 5-minute or 15-minute equal highs first. So I want to see higher time frame equal highs. Sometimes you're gonna have 1-minute equal highs or relative equal highs that aren't on a 5-minute candle. So they are what they are, right? They're 1-minute relative equal highs. They're prominent, not as prominent as what 5-minute relative equal highs or 15-minute would be. So ideally, I see the 5 or 15. You know what I mean? 1 minute's good,
Yeah, okay.
but it's not necessarily what I want.
Yeah, because sometimes I just like those, like the wicks, so you've got like a few equal highs of wicks and they're like, minutes apart. I'm not sure if it's.
I get what you mean. Check whether it's 5-minute first. If it is, it's more prominent. 1 minute is still good. The other thing to consider is that 1 minute on ES are a lot more common. So say there's 1 minute equal highs at your stop. On NQ, not ideal. If there's 1 minute equal highs at what your stop would be on ES, if that makes sense, it's not as bad. So
yeah,
like the equal highs from last night, right, where ES had equal highs upon that manipulation leg, like ES had equal highs here, it was okay because NQ had ran it. NQ had no equal highs. It's an SMT, so it's still protected. But if it was flipped, right, I wouldn't necessarily want to be shorting with equal highs on NQ. Yeah.
Yeah, exactly.
Yep. Straight booming through here. No need for the 5 minute. The other thing is, like, with a 4-hourly SMT like that, it may need to run us all the way up to this LRL or at least to some form of unmitigated gap. So do we have an hourly? Yeah, I want to see how we trade inside of these hourly civvies. Because over here, right, look how diverged we are. Like, you can see we've almost taken, where is it? Holy shit. We've almost taken this buy side all the way up here on ES. This sort of divergence I don't necessarily like. Like, it makes it a decent bit harder to trade when we're very high time frame diverged. So I'm just going to be more cautious. I also don't like taking continuation plays necessarily this far in premium.
Can you explain why you mean like it's harder to trade? Is it because like if it's one so high up in it?
Yeah, it's hard to confirm real versus
you're
fake.
still in discount on the other?
Yeah, so it's probably yeah. Um, it's hard to consider real versus fake SMTs. So yeah, still in discount, and it's easy to forecast an SMT when we're diverged in an extent where, say, we swept this on NQ and not on ES, and ES was literally just like here, rather than NQ being all the way down here, hasn't even traded to premium, and ES is almost at all-time highs. Like that's a hard divergence to trade because how do you really know? You don't want to be picking a top, right? So how do you really confirm whether this what would be a hourly SMT is going to be real or not, right? And by doing that, it just takes a bit more patience. So it forces you to not take so many setups. Like that long here was valid, but you couldn't be like spam shorting through here without significant confirmation. Also, the fact that this is clearly an accumulation range, right? Proportionate, this was 5 hours of accumulation or something, or at least like 4 hours of accumulation. If we have 4 hours of accumulation, I'm likely going to see at least 1 hour of manipulation, so decent manipulation. We're also very close to this other buy side on ES, so it's probable that we potentially run that buy side. Obviously, we're not going to leave this. We're not going to leave a 4 hourly unmitigated gap with an accumulate manipulate higher, right? However, that could still be reason for us to continue a bit higher. It's just quite hard to tell when they are this far apart. It's the sort of things like, if we're this diverged, you can just not trade it. I'm just gonna wait for us to start to recorrelate. It's the same reason that I closed that other one last night, because only when we begin to recorrelate are you gonna really have an idea of the potential flip. So I want to see some form of recorrelation, then divergence, then recorrelation in my direction again. So because we're just super uncorrelated, I need to see something very prominent showing me that this leg is now done. And that could potentially be things like if we start respecting this rejection block, if ES starts flushing, right, while NQ holds a little bit, which would start to bring them back to a more similar, relatively equal spot, right? So relatively, they're not even at that close to the same spot, right? One has swept this high and 20 other highs over here. This one's failing to even take this high. So you can clearly see which is the weaker pair versus stronger pair. Often, before a real flip, is that you'll see them flip in which is the weaker and which is the stronger. So in order for them to recorrelate, ES is going to have to become the weaker pair to then dump us a little bit lower so that we're back more diverged. We're at a similar point in price, if that makes sense.
Okay.
Yeah.
Would you ever look at YM in this situation?
Yeah, I think YM is actually like, this is a good time to look at YM. So if I go look at YM here, I can see, okay, so where is YM on a higher time frame? Clearly, it's NQ that is the sixth sister. So by sixth sister, it just means the lagging pair. So the Dow is almost at all-time highs again. That shit's ridiculous, bro. One tap of a monthly, and we instantly go back to all-time highs. And so yeah, NQ would definitely be your sixth sister. Sixth sister just refers to whichever of the three is lagging significantly. Oh no, get me back on the where is it? We're on you, right? Yeah. So Dow's a good thing to use. Which also means that same thing, it's harder to predict SMTs when the pair that I trade is the sixth sister.
Yeah, right, okay.
Yeah. So it's just the patience pays type of thing. I think the fact that we've been in this expansion leg, that it is valid to take longs like that, right? Where we're very diverged off the low, but when we're this diverged off the high, so many of these are going to be fake SMTs. Like every single time this candle closed or this candle closed after we had swept it on ES is technically an SMT, right? So how do you know which is the right one? You really can't until you just wait. Like you can't be like sitting here trying to like soup an SMT or be like, oh, we've had rejection block and an inversion, like I'm selling. Because if you took this, right, we still left a 5-minute unmitigated gap at your stop with relative equal highs. Equal highs.
That'd be a buy model happening right now, wouldn't it?
Yes, to an extent. I would more so say program. So I'll give this explanation. So there's a difference between programs and models. So a program is essentially when we're, instead of, say this is a sell model, right? So say this is some form of original consolidation, low risk, first stage, it's like in my YouTube video, the first stage accumulation, second stage reaccumulation, second stage distribution, right? That would be our smart money reversal. Instead, what we did is, so if this is a 15-minute market maker sell model, however, there is also the potential that we're now on a higher time frame buy model, is that you have to take a higher time frame one to be at play, and we might create sell models within. However, we're only going to run to the lower time frame sell model. So in this case, this could potentially be your original consolidation for a 5 or a 1-minute market maker model. And so instead of running all the way down to the 15-minute original consolidation down here, because we now have potentially flipped, so we had like monthly SMTs off this low, and it's the start of a new month, there's the potential that, okay, we have now flipped. I'm not saying that we have, but you have to frame that potential, right? Realistically, I do see another run of this low in time, but for now, you assume the potential that it's flipped, right? And that we're now only going to fulfill the lower time frame model and then continue back in our program. So in this case, this might be your this was your original consolidation, clearly, right? Accumulation, we leave the range, low risk, right? Back inside the range, inside the FVG that gapped us out. We then have our first stage, right? However you want to class it, you really can class it multiple different ways. This is your first stage, leave the range, back in here. This would be our first stage reaccumulation, whereby we sweep this low. We're inside of this bullish order block swing right here. This whole swing is technically a bullish order block. Then we would have our leave our first stage accumulation into second stage redistribution, second stage distribution. And then you could say back down into here is our first stage second stage reaccumulation, which was inside of our new day opening gap for, what's this, Friday? So inside of our new day opening gap, we're very cleanly respecting it. That's our second stage reaccumulation. We then have second stage speed and distance, right? Whether you want to consider this to be, okay, that's low risk, first stage, all of these are forms of first stage reaccumulation. Second stage, even that could be second stage reaccumulation. And then we have our second stage distribution. First, second, that's our smart money, low risk off this high right here. So you also have to consider the fact that, are we putting in SMTs off these highs? So I would like to see, let me go over here. Where is it? So as you can see that we are putting in SMTs off these highs. So this high right here was ran out all the way over here. There's spamming SMTs off these internal highs. So there's SMT off these two highs. You can then see we've had our lower time frame model. It's okay. This is kind of hard to explain, but say that other one was our 15-minute model, right? This is actually going to be our 5-minute model. So this is 5 minutes. It's way easier to see like this. 5-minute, low risk, first stage. These are all first stage reaccumulation. Second stage reaccumulation back inside this wick, right? We leave. We have our smart money reversal off the high. We then fulfill a 1-minute model. So our 1-minute model that's been fulfilled. This was like one of the questions that was asked before. was, has that other guy left? Yeah. Was that he asked,
Yeah, he did.
yeah. And it was the same that EJ explained, whereby we've now swept our other form of potential low resistance liquidity. This is a potential 1 minute original consolidation, whereby we have original consolidation, low risk, leave the range. You can just see it as a market maker model, right? Then we fulfill the 1 minute market maker model, sweep this high out here, put in a very prominent SMT. This was just a 5 minute stop hunt. So if this is all some form of accumulation, it's on the 5 minute. This is a 5 minute stop hunt to run out everyone that was in short to this clear 5 minute original consolidation or to rebalance this swing. Smart money is going to ideally stop out everyone that was within that prior to making the run. So you can see we stop them all out on NQ. We run the low resistance liquidity on ES. We put in an SMT off this high. This right here, none of these highs were prominent SMTs. So none of these are like hourly SMTs. These are all low time frame SMTs to fulfill a low time frame model. So 5 and 15s to fulfill a 1 minute model. Whereas this is an hourly SMT to go fill a 5 minute model. So you can see we've then had, if this is our 5 minute model, low risk, as I explained before, this was then a stop hunt. So typically this would be considered, now we've had our smart money reversal. However, there's no real high time frame SMT off the smart money reversal, so it is less prominent. When we have the hourly SMT, now we can then run for our high time frame model and the low resistance liquidity that we left with these failure swings right here. Right? So even though we swept this liquidity, if we sweep this liquidity and we leave more relative equal lows, that's just leaving low resistance for later. So even though now we've come and ran out this high, the fact that we didn't do it on ES is showing me that we're going to then at least come for these low resistance liquidity and ideally run for our 5 minute model. So in this program, we're only seeking lower time frame models. We fulfill the lower time frame model and then we continue higher. It's essentially, it's programmed, it's being driven higher by something outside of market maker model to market maker model, showing you that we're in a program. So that we're clearly drawing to at least some form of liquidity, whatever that may be, to run. So again, you could call this some form of market maker model within this larger market maker model. So this low resistance liquidity here would be an original consolidation, even original consolidation, come back in, low risk, we leave, we come back up in here, first stage, we're first stage reaccumulating, right? We leave the range, we come back in, second stage, reaccumulation, we distribute. We're now sweeping high time frame sell side over here. We're trading into monthly civvies. So, I mean, monthly bissies. We're sweeping out monthly buy side liquidity. I mean, sell side liquidity. God damn. And we're leaving low resistance liquidity. So, if we've had our second stage up in here, right? If this was our second stage in here, we're having jabs that are then running out and creating high resistance liquidity off the low while putting in SMTs. You can also see this to potentially be an accumulate, manipulate, right? Which is often something we will do at our smart money reversal. And then we now flipping, right? Where we've created a low risk in here. This would be pretty much exactly to OTE. That's our low risk. We leave the range, we come back in, first stage reaccumulation inside of this breaker swing. We come back up. That's our first stage distribution. Come back down. This is our second stage reaccumulation by sweeping the 5 minute market maker model and putting in some form of like 15 minute SMT. I didn't like that it left the 4 hourly, right? I actually wanted to see us off open, not gap higher. I wanted to see us trade lower and put in some form of SMT and then trade higher. But all this low resistance liquidity is more so leaning towards, okay, maybe we're not in the buy program, we can still be in the sell program, but we need to fulfill at least this, because everything can potentially, you can frame as a potential original consolidation, right? You could frame this to be an original consolidation. We leave the range, we come back in, low risk, first stage accumulation, second stage reaccumulation, 1, 2, 3, smart money reversal, right? But in this case, I see this to be our most prominent, with it being low resistance liquidity and how diverged we are, right? So maybe we need to fulfill this buy model so that we can then fulfill the sell model that is being composed as we fulfill this buy model. So in the time of completion that it's fulfilling this buy model, it's also creating a sell model. You get me?
Yeah, I get it.
That was a lot of just yapper. It's quite hard to explain programs, and market maker models can be a little bit subjective. But so long as you understand the premise of original consolidation, you can frame that as we've left the range, we come back into the range, that's our low risk. Then we create some form of displacement swing, so a clear run in one direction. We're then reaccumulating. This can all be considered your first stage accumulation. Whatever you take that to be as your entry, right, depends. I can't see SMT, so I can't pick it as exactly, but you can see that here, right, we're reaccumulating inside of a new day opening gap. So we're coming back, we tapped a new day opening gap, we failed to tap the new day opening gap, we're respecting it through here, we respect it here, we're filling it. That is our first stage accumulation. It is to fill this end dog. Then this would be our second stage distribution. Second stage reaccumulating through here, right? We're also leaving low resistance liquidity, so you know this model's not done, all right? Only once we've had some form of like V shape with a smart money reversal is then you can start to, after we've swept out our prominent liquidity. So our prominent liquidity was always the monthly sell side down here. It was monthly unmitigated gaps that needed to be ran. And with how diverged we were, this always made sense as a potential, is the fact that we've had relative equal highs up here. We had this is going to be like an hourly civvies. So there's those hourly civvies that I was paying mind to. And then we have this low resistance liquidity run, which is also 2 weeks ago's previous week high. Again, it's not the easiest because of how diverged we are, right? Like, realistically, in my mind, I like to frame market maker models as in, if we've run the market maker model on ES, we may not need to run it on NQ. So we may just trade back into this accumulation range, fail to run the high, and then trade lower. However, because we're so diverged, it could be more so a matter of, okay, ES is fulfilling this original consolidation, ES needs to sweep this original consolidation, NQ needs to sweep this one, and then we're still diverged, we still have our SMT of something up here, but at least they've both fulfilled some form of model. So I want to see them both fulfill a model. The only issue here is the fact that, to me, this could have fulfilled a model, right? This could be an original consolidation, right? And we could have fulfilled this. However, you have to frame the potential that I'm framing. This is one thing Bionic does really well that I actually learned from him, is if and then statements. So you're framing your narrative using, if this happens, then I do this. So if this high gets swept and this high gets swept on ES, then I'm going to be looking for internal SMTs and an inversion, right? If we then get this inversion, then I can enter. You know what I mean? And that stops you from just taking shitters, to be honest. Stops you from filtering bad trades.
Yeah, makes sense.
Yeah. It's just a good filter on it.
Sick.
Yeah.
I gotta head off, but I appreciate
You're good.
the answers.
No, you're good. I hope it helped.
Yeah.
I'm recording the whole thing too, and I actually posted all. I intentionally kept a few little secrets when I had to like hold myself back.
Sick.
So
All
I
right,
can
thanks,
post.
guys. Appreciate it.
All good. You have a good
Alright,
one at work. Enjoy.
Yeah.
I'm happy.
Anyways, going to get more risk to reward on this trade and cut our loss early. And knowing this, also if we have two fair value gaps, we have this one should protect price, and the second one should be a breakaway gap.
Yeah.
So if we put our stop loss just below C of this
Yeah.
breakaway gap, this should not be broken through, and we should get a better stop loss placement and get more up on our trade. Follow from what I said.
Yeah, that's good. The other thing I'd say is like it's good for the video to write them as two separate ones. Like in my actual trading, I just draw it up as one.
Oh, really?
Yeah, I won't even draw it up as two. It is like it's one inefficiency really. Like
Yeah.
it's the same reason Dodgy like you won't take the inversion unless it inverses both. Like you literally may as well draw it up as one inefficiency. You'll also see that like if you draw it up as one inefficiency, a lot of the times it will respect consequent encroachment of the whole thing as one inefficiency better than it would as individuals.
Yeah. Okay.
So like
That
if you
makes
can see
sense,
my
actually.
chart here, like if I look at
Yeah.
this, right, my eyes don't even see these as two separate vices. Like this is to me, this is fully just one thing. And you can see like
Yeah. Okay.
we come to sort of the consequent encroachment of it. Obviously, you could just take this one, right? And I'm sure it's pretty clean too, very clean, right? Drawing out
Like the
consequent
gap theory on
encroachment.
that isn't even that
But the
good
gap
either.
theory is the actual gap is that.
Yeah.
Yep. That's good.
Yeah. That's actually
like the
pretty,
breakaway
That's
gap.
actually pretty smart.
The breakaway gap theory too, is that was really good. I think it's good in that case, right, where you can separate it because it's clearly off a reversion, so it's going to give you some form of breakaway, and the breakaway is good. You could almost
Yeah.
trail your stop to the top of the breakaway,
Yeah.
because it shouldn't be traded back to. But the thing with forecasting
Yeah.
breakaways is that like it actually is quite hard. Decent bit of the time it will come back. Like if you look at my chart here, this is a very clean breakaway. I like to class breakaways when we've swept this liquidity, right? We've had some form of inversion or not, doesn't matter. We've had an accumulation whereby for the last 10 minutes we haven't created any form of BISI. So there's two things with this is this is our first presented following this sweep of liquidity, right? It's also the first presented that's bullish following the sweep of liquidity. That's also a good sign. We're gapping away from the sweep. And then also it's mostly the fact that we've accumulated. Then the first one that gapped us out to then leave the accumulation range, that's typically going to be our breakaway.
Yeah.
So like
Yeah.
it's not always just going to be the first one after a sweep. Ideally it's off. We haven't created one in time, then we create one, then that's going to be our gap out. That's not going to get traded back to. So it's like the same as here off this high, right? Where we
As more discounted.
Exactly. We've accumulated off this high, we gapped out of here. This is our breakaway. You could consider that our breakaway too. Like if you consider that as one. Realistically, the whole thing is one in my eyes. But it only trades back to this one.
Yeah. So the reason why I chose them two for the video, right?
Mm.
Because if I went up time frame, like say, I think that was the 30-second.
Mm.
If I went to the 1 minute, it probably would have been one.
Yeah,
but I
okay,
would have
that's
had to
perfect
wait
then.
an extra minute. So it was 2 30-seconds,
Mhm.
but it was 1 minute in 1 minute. It's like after the next candle formed, then it got created. So that's why I went down of time frame, put it there, and then
That's perfect, G. That's
Okay.
understanding the fractal nature of price. That's perfect.
So isn't it?
What's up, Nicholas?
Hello.
What's up?
Yeah. Wait, do you recognize me or no?
Is this Nicholas Zen?
Yeah, like on Instagram.
Yeah. Yeah, I know you.
Yeah, I forgot because I ended up going out. I wasn't going out wide, and so I didn't. Like, what time did this start? I forgot, but I knew you were doing it. But I forgot like what time it was.
Yeah. We started like what, 2 hours ago, 3 hours ago.
Yeah.
Yeah.
Not like that.
Alright, I'll give you a few questions if you want, though, Nicholas.
Yeah, I don't know. I just joined.
Yeah, you
know,
just joined. Do you have any random questions? How's your trading been going?
I mean, yeah, okay, I do. My question is for Lucid, like Lucid Flex accounts, like, what should I do? Should I try to get like I'm like should try to get like one, and then to pass the eval, like try to get one large in, and then do like smaller trades, or like should I just only do small trades? Like how would
Have you
approach it?
passed an eval before?
Yeah,
You
I
have?
passed the eval. Top
Okay.
step.
On Top Step? Okay. And in what sort
Yeah,
of fashion did
and
you
I-
pass that?
2 trades.
2 trades. Okay, I would say.
Yeah,
And how long have you been trading for again?
like 6 months on prop firms, but I'm not gonna lie, I'm just recently I actually started like getting
Locking
decent
in?
before I was.
Okay, I
Yeah.
would buy one Lucid Flex 25K account, and I would trade with one micro
All
until
right, bet.
I'd like it's gonna be like a bit of a mental challenge on yourself to go away from, like, yes, every influencer says, and I do it as well myself, is the strat that where you almost essentially pass it in 1 to 2 trades. 1 to 2 trades
Yeah.
applies for if you're like you're playing the game, right? You're playing the ROI
Yeah, I
game,
know.
and you're getting
Yeah, I get
and
what you mean. Like, yeah,
yeah,
my bad. Sorry.
no, you're good. And if you're getting like payouts and stuff, I would just say that I would go with legit one micro. If you can build your account like past 2K, so maybe it gets like actually even still, if you can pass the account with one micro, and it just means you're gonna be spending less of your own money, like in the because 6 months, I'm not gonna lie to you, there's a learning curve still. Like you will find that it's not gonna be like straight uphill to success. So it's
Yeah,
not.
I know, cause
Yeah.
dude, you wanna know how much money I've already spent on prop rooms?
Yeah, yeah, yeah. So cut that cycle now, G. You gotta cut that cycle now before it gets
I know, I'm
good.
just saying. I already know it's not gonna be straight up, cause I've literally spent like thousands of dollars on prop rooms.
I get you. Okay, so if
Shit.
you already understand that, the only way that you're gonna change that is by breaking the cycle and like stopping that. So by like legit only buying 125 a K account, and because there's no time limit, like there's no rebill on Lucid, so you
Yeah, I
legit.
know. That's why, like,
Exactly. So you may as well just take your time, right? There's no rush. If you can pass an account with one micro, you're proving profitability to yourself, right? You're proving
right.
that,
Okay.
okay, then when you get onto the funded stage, then you trade one micro until you've made $1,000, and then you can trade 2 micros, then 3 micros. Just start with a
Okay, I
really
see.
low risk.
I didn't. I'm not gonna lie. You're the first person I've heard like say something like that because
Because everyone else is
there's
trying to
like.
get you to bin 50 accounts
What
on
do
their
you?
code.
Wait, what do you say?
Because everyone else is trying to get you to blow 50 accounts on their code so they make more money off it.
Yeah, I mean, I guess
Yeah,
so, but
low
what you call
key.
it? Because there's this trader. I don't know if you know him. His name's Salman Nasiri, right?
Okay.
And basically, I was like learning from him and stuff, and like I was in his Discord and stuff, and he basically told all of us to trade with 5 micros, and then he said like if you're like once you get with that, you can go like do like a mini, 2 mini on like a 50K account. So that's what I've been doing, and
I don't think five
I just kept
micros is
going.
bad. Um,
Yeah. Wait, what did you say?
I don't think 5 micros is bad on a 50K account. On a 25K account, you need to de-risk. Um,
Okay.
and I would say, yeah, prove to yourself first. Like, you got to just minimize your expenditure. Like, if you can legit make the challenge to yourself to just pass one account using one micro. Once you do that,
Okay. So I
you
have a question.
yeah.
All right. Sorry for interrupting, but so let's say I already bought like a 50K Lucid Flex,
Mm-hmm.
right? So should I just hold off on to trade that and then buy
No,
25K?
no, no,
I
no, no.
start with
If
one
you
micro
have the
first.
50K, right? So you have the 50K account, same thing. One micro, if it's a 50K, so long as you can
Yeah.
manage risk, one thing that might not be bad for you is 1 to 3 micros. But that means not 3 micros every time. That means one micro every time. And every now and then, when you feel comfortable and when it is a good enough setup, and you're like, okay, this is A plus, then maybe you go 2 to 3 micros. But you never ever go more than 3 micros.
Okay. I'll
Not
write this
until you've
down, by
passed
the
the
way.
account. When
Wait.
you pass the account, same thing, to be honest. You trade 1 to 3 micros. When you've built a buffer, then you can scale.
Okay. Wait. 1 second. I'm writing it down.
Yeah, yeah, yeah.
1 to 3 micros.
100%. No rush.
Nah, I'm not gonna lie. This is really it's life changing risk management for me because that's like my weakest thing.
Okay, if
Like,
that's your weakest thing, I got another tip for you. Also, write down. So, on ICT's channel, his 2016 core content, if you even just search up on like AI or the internet and you just be like ICT 2016 core content on risk management. He has really good risk management stuff in there.
No, he made that type of video. I thought he only had like models and stuff.
No. He has risk exactly because all his recent is models and that shit. His older stuff has risk management.
Wow, thank you. That was just sauce.
Yeah,
That was
of
actual
course.
sauce.
That's all good. Yeah, peep those videos. Also, a
The
few
most
of the
important thing is
yeah.
proving profitability.
Yeah,
'Cause, like,
completely.
With prop firms, it's all about like getting the amount of like, so obviously you get 50K for only like 100 something bucks.
Yeah,
But it's about like, what's the word? Like that's how people make so much money, but you can't make it unless you're consistently winning more than you're losing. So you gotta prove that.
Mm-hmm.
yeah.
And also, you got to think that the prop firm has essentially rigged it with all these rules, right? So they're like the house, right? They've rigged it and they've thrown these rules in your face to try and fuck your trading up. So to negate that, if you literally just stick to a set parameters that does sit within it, but it is not necessarily having to follow their rules, you're just sitting within parameters that you're comfortable with by using 1 to 3 micros, you'll be very confident to be holding trades. You'll be confident in, like, I'm sure that you've been floating like a shit ton of money when you put a bunch of cons on to try and pass an account in one shot, and then you make psychological errors by like moving your stop and those sorts of things because it's too much money to what you can handle as your risk.
Yeah. What's it called? I know something about me. It was kind of weird.
Mm.
Is that like getting trading? That's when I first passed my eval. Like 1 month into trading, like less than 1 month actually. But the thing is, the only reason why I passed it is because like it was a signaling thing. It wasn't like this was like before I even like followed your account and like knew who you were. You know.
Mm-mm.
So, like it was bad though. But that made me have like false confidence. I knew what I was doing because after I passed that, and I actually even got like actually what's it called? Activated the XFA. It was just on Tops 10. I was trading gold at the time, and then I actually built a $2,000 buffer. My risk management was off. I was just like basically essentially just full porting and holding it for like a few minutes, you know? And then I what's it called? I built a buffer 2,000, and then after that I full ported again. Boom, I blew it. You know what I mean?
Yeah.
And ever since then, I just been blowing the evals ever since. Like,
So I'd honestly say that unfortunately you were put in a more mentally disadvantageous point by going through signals and by doing those sorts of things, and it causes those sorts of issues, right? So the only way to break that is to essentially hit a mental reset on all those things, right? Forget those sorts of things that you've learned, right? And I would only consider the things that either ICT has said or me and Steele have said, because to be honest, like, I am truly trying to guide you down a path of profitability, and that is by starting with cutting the spending so much on evals, right? And formulating something of your own. So you obviously you're going to be like using the model that I have given, and like maybe you're going to be using that same sort of understanding of trade similarly, but you're still formulating your own model. Like you're making decisions for yourself. You need to build all of that. Like coming from signals is hard, and it takes a little bit of rewiring. So starting by just reducing your cons, and following one system. So is there any specific like sequence or like what you're looking for before a trade?
Yeah. So thing is, yeah, like I was just giving my history, but like right now, currently, like I'm doing pretty good. Like I did end up like, cause I'm pretty sure I sent you like photo like
Yeah, of that
or
Lucid
whatever,
account.
right? Yeah. I did end up blowing that.
Yeah.
So I FOMOed into like the grades, but like that's something rare. Like I don't usually do that like nowadays.
Mm-hmm.
But the things before that eval, I was just practicing. Like I was like practice trading, but live, and then I would back test like previous week, like price stuff. So basically, I'm just trying to keep getting reps in.
Yeah,
You know?
100%.
So now I got another eval, but like
I'm just not gonna fumble because I'm not trying to like freaking waste more money. Like I'm literally
Uh-huh.
18. I don't even got money like that.
Yeah.
So I
So
don't
set
have,
rules on yourself.
you know.
One thing I'd say is if you can't, right, like I'm sure a lot of traders struggle with following rules, right? Like you're essentially trying to escape a system, right, of the whole uni work like 9 to 5, right? So you're essentially not a person that is naturally good at following rules, right? You're a risk taker. You're someone that likes to create your own path. So in saying that, you need to at the least be able to follow your own rules. So set a bunch of rules to yourself, right? Whatever that may be. Everyone's just slightly individual. For me, I know that if I take 2 losses in a row or consecutive losses, I need to get off the chart, right? That's one thing for
Yes.
me that I just have to do. So I'll use a certain risk parameter. So right now at the moment, I've just been trading these. I'm trying to like stack Apex um, funding. So like the last few days, I've been trading these 3 Apex 50K accounts, and I'm risking 5 to 10 micros, right? Because obviously my risk scaling is going to be different, but I'm also someone that could be using 15, 20, 25 micros, and I could be one-shotting these accounts. But instead, I've set to myself to not do that and to instead follow parameters of, okay, I'm going to be using 10 to 15 micros, which for you would be 1 to 3 micros at first. And then I'm bloody, fuck, where was I going with this? And then I'm only taking 2 trades a day. So maybe not necessarily 2 trades a day, right? But for me, it's 2 losses and done. 2 consecutive losses, done, right? Maybe that might entail 3 trades, max 4 trades, right? But if it's 2 consecutive losses, I'm done because I know that that is what is most likely to lead me to spiraling. And typically, that third loss for me would be over leveraged, and that's going to cause damage. And I know that steel is the same, right? But everyone is going to be slightly different. You just have to be able to identify where your pitfalls are.
Yeah, this is super helpful. But you're still like,
I'm glad, bro. I'm glad. Those things will help you massively, I reckon.
oh, my bad. Wait, what did you say?
You're good. I just said those things will help you massively. Discord has a delay, so like sometimes I'm speaking over you, you're speaking over me. It's all good.
Yeah. The thing is, I talk. So it's like when I'm talking, it's like if you're talking too, I don't want to like, keep talking.
No, it's okay. It's
Say-
Discord, bro. It's delayed. You can't even tell.
Oh, okay.
Yeah, that's why I end up talking over people all the time too, because I can't, because of the delay.
What's it called? So I saw on Steel's thing that he was like launching, I think, some type of like mentorship thing. Are you doing that too or no?
Nah, so Steele's just hit 10K followers, so like he's it's essentially worth it for him to start mentoring people because it's too big of a time commitment to be giving away like all this resource. Steele never did do the same amount as like, I don't know, I can't help myself but to give away like the shit that I know. I also understand that my audience is small. Hey?
My bad. I said I can tell because I remember you gave me your thing. Like I use that because I have my own system and stuff that like works that like I got from yours, and then also from like another person that now that I learned from. And he like trades market maker with Wyckoff, but I don't like or Wyckoff. I don't know how to pronounce it.
Wyckoff.
But yeah, Wyckoff. But things he doesn't like actually like trade it like Wyckoff like strictly. He just looks at what Wyckoff considers like an accumulation or whatever, like phase or whatever you want to call it, and then there's a slight difference between like a regular accumulation and the Wyckoff one. I just use that for my market maker models. So, but now like I'm very consistent with market maker models. Now obviously I'm not like you, like you know, you're obviously like way more consistent. Like you've proven that over time. But for me, like for the past month, I've been very consistent on like practice. And then on that eval, I had like 2 losses in a trading week. But the thing is, the next, I literally lost every.
Yeah.
You know? So.
And so yours are occurring in one day, right? You're having one crash out day.
Yeah, like okay, like what was like no, like the week last week of July, right? For before we started like segueing to August. Let me go to my thing so I can like read off my P&L. Is that okay or no?
Yeah, it's okay, completely.
All right. I just want to be. You can see like, 'cause there's some inconsistency. Like there's a day where like I made like way too much. I didn't realize. I never was checking my P&L.
Yeah.
Which is not like I should be checking it every day. And then there was one day where like I think I barely made anything, and before I barely lost. Go to right on.
You're good, no rush.
Can we see your details? Yeah, I've reached it. Crazy. So,
See. All right. So July 27th, right? First trade ever on the account.
Mm-hmm.
Negative 153. The next day, banger trade, 1,163.
Mm-hmm.
The next day, another good trade, $620.75. The next day, terrible, massive loss. This is the loss where I just FOMO'd and just, I don't know, terrible. Negative $1,824.50. Next day, made way too much, $2,666.50. Because the thing is, I got confused because since I thought I lost all this money, I thought I had to like make more money, but instead you're only supposed to make like 1,500 per day or something like that.
Mm-hmm.
Like
Yeah,
max,
so
I think.
with a 50%
I did
consistency,
that.
you're 1,500.
Yeah. So after I did that, my target ended up being $55,334, and then did like literally this week Monday negative 2,380, and then obviously you breached the rules. So
So
not
is
breached the
that
rules. I mean, so
is that you taking, how many trades did you take in that session?
how do you check it?
Or do you remember? At least
Hey,
roughly?
Let me see. Wait, no. Wait. Okay, let me see something.
Is it just me, but he's risking like a different amount every trade.
Yeah.
Yeah, probably.
So that is what would get you in a trap too, right? It's a hard psychological trap where you're not risking enough on the bad trades, and then you're risking. No, you're not risking enough on the good trades, and you're risking too much on the bad trades.
Yeah, exactly. Like for instance, July 30th.
Looks
Dang,
good, Kaisa.
I didn't really do that. Yeah, I think my risk management was terrible.
So it's, to me, it honestly seems like it's more risk management than anything, right? So
And
the
the thing-
first thing you just need to dial is that set contract number.
Yeah.
So maybe even for
Maybe-
now, you don't need to
Yeah.
do 3 cons.
I need to like discipline myself in that sense because I'm literally looking at. Apparently, one day I took like a mini, and then another day I took like what's it called? I took like 7 micro. Like I don't know. Like I don't know what I was thinking about. Basically, I think I'm supposed to only do 5, right? But like I was basically just not respecting it at all.
Exactly,
Well,
and that's the thing. You have to respect your own rules.
Yeah.
So
So it's like the one, like carried by like the cons. Like it wasn't like, oh, you waited like for the shut up to hit for like 1 to 4, and then it's like 1 to 2 micros. So it's like you're gonna make the same amount because it ran longer. It
exactly.
was just like in and out, and then since I sized heavy, like I made like a lot more money.
Mm-hmm.
Yeah.
Yeah. So
Yeah, that's not.
I think the biggest thing for you, Nicholas, is 100% just going to be that risk management. I think that it'll make a very big difference for you, to be honest. When you can manage that risk, it's just about
Yeah, for
setting
sure.
a 1 to 3 cons on it. Ideally, even just set a strict limited 1 con, maybe 2 cons, right? Just for at least a period of time, so you can get used to just trading one size. Because then you're also going to get better at calculating your risk, right? So it's $2 a handle per con. It makes it really easy. You know how many handles there are, just times it by 2. That's how much money you're going to make. So it gives you that baseline. It also helps you. So calculating that is actually quite good, to be honest. Like it starts to build to, okay, say I want to risk a certain amount of money, right? So say on a day I might want to risk $500. I can hit a quick calculation between knowing how many handles my stop will be and then doing the maths for that, so that I can say, okay, I want to risk 500 for my entry right here would be 5 to 10 or 5 contracts, right? 5 contracts exactly. So that's what will help too. You at least have a better gauge on what's going on in terms of risk versus reward.
Yeah, that just helped a lot. So basically, what I gotta do is like de-risk completely,
Mm-hmm.
so I can actually prove to myself
Prove
that
to
I'm
yourself,
consistent.
100%.
Because the thing is, yeah, because the thing is, like, if I'm just doing like large positions and then like a 1-to-1 or 1-to-2, whatever it is, like that's not what's the word? That's not gonna work long term. And also, I
Exactly.
didn't prove my system to actually be profitable. So it's like, yeah,
100%.
that whole like over like leveraging thing is like a crutch for me to
Mm-hmm.
like win when there's times I wouldn't have won that trade or
And
made any money on that trade.
if you know that that's your crux, it's just a matter of how badly do you want it. So every time that you go to trade, think to yourself, okay, what are the things that I can do here that's gonna get me to where I want to be? And obviously what you want to be is successful and a good trader and all those things. So how are you gonna get it, right? And how you're gonna get it, clearly for your case, is by setting a very low risk, right? So risking 1 to 3 micros. Honestly, for the first week, can you just start with me on 1 micro? 1 micro,
Yeah.
and bro, just all you have to do over everything, focus on just using that 1 micro. If you take a loss, that's okay, right? You can potentially take another trade with 1 micro. The other thing I want you to do is, okay, I need to know is your first win, like how many trades are you typically taking per session? And what is the like
All right.
average
So,
statistical order of that? So is it like 1 win and then a loss, or a loss and then a win?
well, thing is, I don't know because I'd have to like check everything. Like I don't know
Mm-hmm.
like my actual statistical average. I can calculate it for you and then check back
Mm-hmm.
with you. But for this account though, I'm looking at it. Let me see. I'm trying to look at like from the beginning when I started trading on it. All right, so like the first day, I took a loss. And this one was actually like my like max risk, which was 5 micros. I took a loss, which is only $153 on April 27th.
Mm-hmm.
Wait, what does P&L high mean?
No, it's just the point in which, what was your P&L high?
It says $800.
So that means you must have been up 800 closed at one point, and then you re-entered
Oh
and end
my.
up losing.
Oh dang. Then that means what's it called? I must have been had like a greed problem that day or something.
Okay,
That's
so
crazy.
yeah, I can help you
That's
out here.
crazy. I did not know that.
Is what you need to do,
Dang.
right? Is there's a few things. Start with the micros thing. Second, every trade you take at least tracks some form of statistical measure. So you need to know like whether it was the first trade that you won and then the second one you might have lost, and that's what set you back, because then you can formulate your own set of rules that apply best for you, and you're going to be able to increase your win rate at the highest potential. So what I would do is few things to start with. Start, if you can like write this down somewhere, this week for the rest of the week, trade with 1 micro, and I want you to abide by, if you take 1 win, you're done for at least that session. So if you're someone that likes to trade both London session and New York session or whatever, you're at the minimum done for that session. If you want, you can call it for the whole day. It's 1 win and done, right? The other thing, 2 losses back to back. So if you lose consecutively twice, you're done, right? You're clearly offside. Your edge isn't playing out. Something's going wrong, right?
Yeah.
You're better off just hopping off the charts. And then the final thing, so what it was, 1 micro, it was 2 losses and done, 1 win and done. The final thing is take a absolute max of 4 trades in a day. Absolute max. So if that's 1 win, if that's a loss, a break even, another break even, and a win, it's okay, right? But no more than that.
Oh wait, do you mean like per day, as in if you trade multiple sessions? Because I only take 2 trades per session max.
Well, that's also like same sort of thing, right? That's very valid. 2 trades per session is good. For me, sometimes I'll allow myself, like that's the ideal, right? So I'll take trades per session max. The most I'll ever take is 4 trades in a session. And if I've taken 4 trades in that session, I will probably not trade the next session. And the only reason I'm ever taking 4 trades is there was one case of it that happened like a few weeks ago, and it was where I entered right with the direction right. I was onside. I got stop punted, and then I re-entered. I took a small loss, then took a decent win, right? And then it was just very clear that that run was now done and that we were reversing. So same thing happened on the other side. I went to short. So neither of these are consecutive losses. I went to short, lost another small amount. Then we had the rate of liquidity that put in another SMT. Then it was confirmed that my bias was now right and that we were going to now run. So I was only being stopped out on manipulation legs prior to the actual run. And then I entered on the short.
Yeah, honestly, I think that's like pretty advanced. Like for me, I go 1 win, I'm off the charts, 1 loss. If I am like completely level-headed, then I can continue.
That's
But
the best way to do it from
I have to
base.
be completely level-headed, and like it's not like, oh, this trade's really good. Like I maybe even take like a 15-minute break.
Yeah, no,
before I
go
come
walk
back.
away from the charts. Yeah, 100%.
Yeah.
I think that's the best
And
bet.
if a big piece of advice too for you, Nicholas, when I started, I'd always have like one of those like wannabe crash out days where I'll be like, oh, I just lost this big amount, I want to win it back.
Yeah, that
whatever else.
happened to me. It was so bad.
Yeah. So what I do, if I take a loss and it's like I know I'm not in a good mental space, I'll just lock myself out of the account. It's like the safest play,
Yeah,
and it's like you're speaking to your like future self. You're like,
100%.
right now, I know if I was to trade anymore, it's a bad decision. So let me make my future self not even have the option.
100%.
Yeah, what's it called? Like a few months ago, I started locking myself out of the account of like my account. And thing is, like that account would last more days, but I was still ended up blowing it.
Mm. Yeah.
And then for the Lucid as well, and I don't know. I think I'll be honest, for Lucid, I don't think I had what's it called? I did not have no they lost limit. Yeah, I didn't have that. But on the top, still want to start doing it because what's it called? And start locking myself the account just because I noticed that like I'll like just like what if I like lost? Like when I took one big loss and I went like go back in like registry and all that stuff, like more than likely like I would say like 60 to 70% of the time I would have just blown that account if I took another trade. So I just stopped doing that and then lock myself out of the account after I took like a big loss. But
No, I mean like on Tradeovate, right? Because you use Tradeovate to trade, right?
for Lucid, no.
No, so do you use TradingView? Like that's
No.
how you enter?
I use for
Trade C, right?
Lucid, Trade C, and
Yeah. So
Top
Trade
step-
C has this option where if you can manually lock yourself out. So like not by a daily loss limit, by like you saying it, you know?
so I could lock myself out on Trade C.
Mm-hmm.
Yeah. There's an option because I used to use it ages ago.
Wait,
There's
I
an
have a question.
option.
Yeah.
Yeah.
I got. What's the best one to use? Like, what's the best charting platform to use?
Trading
Like
View.
universally.
Yeah, TradingView.
Trading
Is
View
it
is going to be the
because,
best. TradeC has Tradeovate compatibility, right?
What does
EJ?
that mean?
No. TradeC is its own platform.
TradeC is its own platform, no Tradeovate compatibility.
No, so it's like it's the other type of thing.
Yeah.
But do you know how Apex has that its own thing? It's legit just like that. It's like pretty
Yeah.
much identical.
Yeah. I've used it one time,
But it is better. It is better than the Apex one, but
but
it's-
yeah, it's still
apparently
not great.
people say it has bad feels, but when I used it, I enjoyed it a lot actually.
Yeah, I remember I didn't mind it too. I think I got a bad feel like one time, but it wasn't too bad. It would definitely be a lot better since last time I used it too.
Yeah.
But yeah, I would say lock yourself out. TradeC has all those like capabilities. Yeah, locking out's really good. You should also be able to set daily max loss limits, right? I don't know if
Yeah,
it's on
that's
TradeC.
true.
But on
Yeah,
everything
I
else,
think
you can
that is
set
good.
daily max loss limits. Also, what I would use, Nicholas, is if you can, I'd have two charts up. So I'd always have Trading View up, and
Yeah, I can. Yeah.
yeah, and have Trade C up at the same time.
But one thing about me is I don't have like any like subscription on TradingView, so it's kind of like I
No
can't. I'm
subscription.
limited. Like,
Yeah. No, Trade C is definitely good. It has free like 15-second chart and stuff.
Yeah, yeah, that part's good.
yeah, it does.
You can't
And
have delayed data though. I'm not gonna lie, on Trading View.
oh, you do? I didn't.
Nah,
Oh, wait.
if yeah,
Oh, yeah,
yours would
yeah.
be
I think
delayed if
10
you haven't
minutes.
paid anything.
Yeah, 10 minutes delayed. Yeah, thing is, that's why I can't trade on it. But thing is, I can easily like invest into like a subscription just for like to better myself. You
Yeah,
know,
yeah, yeah. So
so
what
like
you're
I
gonna
could
do
just
is instead of spending so much on evals, just make that buy a subscription. It's worth it.
yeah,
Buy the
yeah. I'm gonna
cheapest
do
one.
that.
I don't think he has to. He gets it all for free on Trade C.
Yeah, I know, but if he wants a second chart, I mean, you
Yeah,
can.
I'm gonna do it. I'm gonna do it, and then eventually I'm gonna just move on, like move like fully just trading and charting on TradingView
Yeah,
for
that's the
about.
ideal. I actually keep
The thing is, yeah,
bro, I keep a Top Step account up to be honest, just because it's probably the cleanest platform and they give you free 15-second and 30-second data. Um,
oh, that's cool.
but I would just try get Trading View up and just pay for the basic
Yeah,
subscription. You only need 1 minute and then use lower time frames on Trade C. Also, to be honest,
yeah,
one thing I'd
that's
say is don't even look anything below a 1 minute at first.
yeah. What's it called? One time, like I'm back testing, I tried to do it, and I was like, yeah, I'm not built for this, so I just stopped.
Yeah, yeah, just
But
don't look at it yet.
weird, because for me, even 1 minute feels like it's like freaking the Flash, like running across the screen. Like I
Yeah.
can't
Valid.
sometimes. Like
I would
literally
say it depends what
today.
time you're trading. Um,
Yeah, I like to trade New York AM, which is like super high volatile,
yeah,
like
that's
high
why it looks like the
volatility.
Flash.
So yeah, there's like, yeah, it was pretty bad today. I'm not gonna lie. Also, one thing that's just I know I've ever heard this people like, wait, what? But I also like, yeah, like this is kind of stupid, and like I've lost a lot of money doing this too.
It's alright.
But I also like have like a live account on the side on Weeble, and I've been trading on that too. So
Okay. I don't think that's the worst thing in the world, but
no,
Weeble's
but
like
I know,
options, right?
yeah, I know how to do options too, and yeah, but options is like it sucks because like the Greeks and stuff, like it just messes with your position. So,
Yeah, okay. Um,
but for
yeah, I don't
they
think
have
it's the worst thing in
futures
the world. I
too.
would avoid cluttering your brain by trying to trade on so many things at once. I would simplify everything and it will make your ability to focus on a 1 minute chart and make all that make sense in real time easier. Otherwise, you're legit like overstimming yourself. Like there's too much going on.
Yeah, I mean you're right. The thing is, I got like problems and stuff that I need to take, like business I need to take care of. Like I need to make money,
Yeah.
So it's like I kind of just try to like try everything. Like I've tried options, I tried futures, I even tried
Mm.
regular stocks. I tried so many different things.
Unfortunately,
So
it's a mindset you low key need to break. Like, you need to get in the mindset of you don't need those things, right? It's good, it will happen from doing the process, right? But if you need those things, then you become dependent on it, and then you're seeking the reward rather than the process. If you're ever thinking about the reward, right? So if you're thinking about making money and providing for your family, rather than thinking about that, thinking about the reward, think about how you're going to do that, right? Think about what the future version of you who's a profitable, good trader is going to do. Look at what I'm doing or what other profitable traders are doing and what all
yeah,
these other guys are doing.
you what's it called? You, Still, and TK are definitely very inspired for me. Like I follow all y'all. I watch like try to watch all you guys like stuff.
Yeah,
It's like good.
appreciate it.
It's good information.
Yeah, of course. TK is very good with a lot of the psych stuff too. He's got a lot of really good psychological messages in there. Um, and then obviously just the source from me and Still. Um,
Yeah.
But yeah,
But like, can I show you like my current stuff, like my current progress with like market makers and stuff.
yeah,
Like
yeah.
I've came a long way because like a year ago, like I was really a zero in trading. Like I didn't even understand like the candles, like what they meant and stuff. It was
Yeah.
pretty bad. But yeah, trying to find it.
You're all good. Oh. Y'all gonna peep London at all?
Yo, if I get this funded, I will. Like, if this thing
Yeah, bro.
upgrades.
It should load in time.
Let me see. Complete your KYC.
Yeah, you have to do that shit.
Fuck.
It doesn't take long. Just get your like ID or passport or something. It's like really quick. It should activate
Okay,
like
I
straight
don't
away.
have a passport.
You don't have
I
a
got
passport?
Oh, that shit
Dang.
costs like $500, bro.
Yeah, true.
Yeah.
Actually, like here.
Yeah,
Never
what's
even
it
left
called?
the country.
What's it called? Yeah. Luckily, I have parents, so they paid for it, but I didn't know it's that much.
Yeah, passport's expensive.
Yeah, because I got a passport. I got one recently. Well, not recently, but like recently for like my age. Like I didn't get one like when I was young. I got one like a year ago.
Yeah, nice. Yeah, just use. You can use your ID, EJ. Just your driver's. Do you have a
Take a
driver's
photo of
license?
your-
Surely.
Yeah, I'll get license.
Yeah, good.
Take a picture of it. Fuck, I'm gonna go to my car and grab it out. It's
GG's.
All right.
Can you get it up,
On
Nicholas?
my like back, like
Yeah.
my like studying, like because one of them is like not back testing, it's regular trading view, but I sent all my things like my progress kind of,
Mm-hmm.
and the where you see, um, I'm trying to see, you see NQ on one side, and ES. That's like my most recent back testing.
Do you want to share your screen?
Oh, I put it in chat.
Or you put it in chat? I'll bet. Yep, sweet.
Yeah, it's on my phone, so I can't really like.
Yeah, no, you're all
FX
good.
replay doesn't-
Okay.
Yeah, it doesn't really work that.
Yep,
on
good
phones.
understanding of the buyer model there. Good entry mechanism. What was your entry of that? We have a rejection block. Respect the rejection block.
Which one are you looking at? I gotta go back.
Oh, okay. Yeah, sorry.
Which one are you looking at?
I'm on the first image. It's FX replay. Yeah.
Oh, first image. Yeah, the first image.
Rejection
I
block
have-
SMT.
Bullish projection block.
Yep.
Bullish SMT with ES.
Yep.
Fair value gap entry. Like, thing is, dude, I told you Salman Nasiri, right?
Yep.
So, yeah, you can look him up if you want to on Instagram. Like, he's pretty successful now, but he actually ended up like kind of abandoning the trading industry to do something else. So
Yeah.
that
Okay.
sucked. A lot of students that were like counting on him. Like, but basically, he teaches that like when in a fair value gap, if it gets wicked into a bunch of times after it closes above it, or then you can enter or whatever or something like that.
Mm-hmm.
So that's basically how I got into the trade, and then I learned market maker models just from watching YouTube videos. Like I watched Justine Worley his stuff,
Yeah, that
and
one's
then
good.
I watched Ice T. I'm not gonna lie. Unfortunately, it's bad to say, but I just find Ice T kind of like his real stuff on his channel kind of boring because like he like tries to like he kind of like goes on sometimes talks about other stuff. And, like,
Yeah.
I don't want to skip through it, so I don't really watch the full thing. I think I watched like 20 minutes of it. I think it's like an hour long. So I ended up just watching Justin Warling's thing because his thing, it's like it was more like engaging. So I watched his video, it's like 30 minutes, and then I watched the other dude's video. It's like Dan Dowd something. It was like 25 minutes. So after that, I just started practicing them, and then randomly I found this dude who has like 8 years of trading experience who only trades market maker models. And then I joined his Discord, and he basically just gave me more sauce about them.
Mm-hmm.
That's how I got to this. And also, I was trying to like
learn SMTs because I saw on the thing he gave me that that's like a manipulation I need to learn.
Mhm.
So my boy, cause I had like a friend who trades and like he's way better than me. He's already like
Okay.
off like thinking months and stuff. And it's just like dang, I like felt like kind of like a failure, but I didn't say anything. But I did feel like a failure, but I didn't say that to him because I'm not trying to like show jealousy or anything. But basically, that's kind of like how I got to this point. Is what I'm trying
Mhm.
to say because this is not like obviously like because I know on the thing you gave me like the what's it called here the Pegasus model was it
Mhm.
something like that, right?
Yep.
A lot of different things like focus on certain time frames
Mhm.
like Omi trade and Q use yes for divergence.
Yep.
There's like not there yet to where like I know all that stuff.
No,
Like,
but I
I know
think
what a
you're
sequence.
learning the right things, and that's what matters. Is that you've actually gone back and you've looked through the Pegasus model, and you're learning things from that. And I think that's the best learning guide, to be honest.
What's it called? I checked back through our messages. You told me to like do 2024 mentorship, and I went through like pretty much like I don't think I did 100%, but like pretty much like 90% of it. I
Yeah.
went through it like I actually watched through it. So that helped a lot. I did find it very boring. So I didn't pay attention to like 100% like
It's
all the
hard,
way
bro.
through.
It's not an
Yeah,
easy
shit's
watch.
awesome.
I find it like so boring. Like I'm
Yeah.
sorry because he just keeps talking, and like
You got to think
but
So
too.
you
So,
1 to 2 a day.
hey,
I said 1 to 2 videos a day. I reckon.
Yeah.
It's a sweet spot.
the other thing I'd say is that it's partly like a test in a sense. He is a really weird guy, right? Where he's made these videos intentionally like that. He intentionally rambles because it's to teach you patience. Like he's really under the belief that if you are willing to sit through his bullshit and all that stuff, then you deserve to be a profitable trader. And that's sort of the mindset that he came in with it.
that is actually like that just like blew my mind in a sense because every single time I was just like, bruh, like get on with the point. Like I actually
Yeah.
just like
He's not
wanted to pull
yapping
my
for
hair
no
out.
reason.
Yeah, but nah, I'm not gonna lie. Anime.
Yeah, yeah, yeah. I'm a big anime watcher.
Oh damn.
I think it's in Naruto
Yeah, yeah,
where
Naruto.
like the scene where everyone's using their like, or is this something else? Dang, I feel like I got it mixed up. But basically, it's like an anime. It's either Naruto or like Hunter or something, or where they basically are taking a test and then everyone uses their ability to like cheat, and then the test was to cheat without getting caught, but they thought the test was the test in front of them.
Yeah, yeah,
So
yeah.
yeah,
Completely. Yeah, yeah. Nah,
basically it's like this
that's what it
where
is.
like yeah, I didn't realize that until you told me this
Yeah, yeah,
just
yeah,
now.
yeah. That's what it is.
I'll just be
He's
like,
playing a
oh, here we
character,
go.
bro. That's fully a character. That's a guy that is a very smart guy and an educator that's playing a character because he's fully under the belief that if he goes that way about it and if he teaches in that form that he's going to have the most proportion of profitable students because obviously his belief is
I
that
want to say something after this, yeah.
his belief is that if you can do that, then you're worthy essentially. It's
Yeah,
interesting.
I agree because I'm seeing myself struggle and like if I had more patience then I would not do certain things. And
Hmm.
if I had more discipline, I know that's just to instill discipline. So now I'm definitely gonna like maybe even just start over the 2024 and actually complete it and then make sure no skips, no pause. Like obviously I can take like breaks, like bathroom break or something, but like not like be locked in, like take it seriously, treat it as if like it's college. Because at the end of the day, like you're getting so much value from it. So it might as well
Completely.
be a college. But
Completely.
yeah, I'm definitely gonna write that down
Yeah.
because that's actually something that just like I never thought of it like that. Ever.
Completely.
But I seen
What was the
someone
thing?
on. Oh my bad.
Wait, what was you
I
saying?
said what was the thing? I said what was the thing that?
Oh, it's just the fact that like ICT intentionally is rambling and he's intentionally like essentially
Oh,
wasting time through his lectures to teach you patience.
okay, yeah.
And like if you
Yeah,
go listen to bro, I actually like went down the full freak route. Like me and James had a very different mindset coming into it. It wasn't like it. I don't know. We both had a very willing to learn mindset in the sense that we saw 3 hour long lectures and hundreds of them to be like, oh shit, like this is sick. I have a lot to learn, you know? And that we really
Yeah,
were
that's
under the belief that, hey, yeah, we were under the
Wait,
belief
what?
that if we watch all these videos, there is no reason you shouldn't succeed. Like, you essentially leave no room for failure by watching all of them. You get to a point where you have a complete understanding of the charts, rather than like, oh, this is a
Okay.
sack. Like these are 3 hours.
Okay.
Yeah, which helped a lot.
What's it called? Yeah, so basically, I seen on Instagram there was like, like someone was posting. It was like an American like content creator, like a trader, and
Mm.
he was posting about how like the number one trader in Portugal made $170,000 in Apex payouts and something like that. And
Yeah.
then like that opened my mind up even more to be like if I actually like take this seriously, like, I could actually like change my life for real.
100%.
Because if someone out there is able to do that, then like why can't I do something
Why
like
can't
similar?
you?
Like
Yeah,
me personally,
completely.
yeah, but me personally, like my goal isn't even to make that much. Like, I just want to make enough to where like my mom doesn't have to work again,
Completely.
and my
And
sisters get to work
well,
less.
that's
Work
the real
more.
definition of success, you know? Like,
Yeah,
everyone can set a monetary value on it, but that is the real definition of it. That is really what everyone's seeking. And so long as you frame it in that way, you're not trying to like, you don't have to be top ticking and bottom ticking. Like, you just need a system that works for you.
what's it called? My bad for interrupting again, but I kind of
Okay.
fell in that like trap of seeing people. Cause thing is, there's all these like people like I don't know if they're like LARPing or not, but like there's these two people that like I follow. They like say they're like quants and stuff, and they be showing these like crazy trades where they're like trading like in 300 points or 500 points. And when I see stuff like that, I'm like, dang, like I'm so terrible at trading. You know what I mean?
Nah, bro.
So
Hey, it doesn't. One thing that I can tell you that you are doing is don't compare yourself to anyone else. Your journey is going to be completely different. It is your own journey, right? No one else's journey matters except your own. Yours is the most important. Yours is all you care about. If you're profitable, if you have a winning strategy, you're equally as successful as any of those guys. They've just put in more hours and more repetition at their model.
yeah, that's a good way to look at it. So basically, it's like me versus me type of mentality.
It is
versus
completely.
me, like,
Don't even think about anyone else. Fuck them all. It's
Hey, comparison is a thief of joy, bro.
yep, completely.
Yeah.
Completely. And yeah, literally just don't compare yourself to anyone else. Y'all see this banger though? Y'all on my chart?
Yeah, I do.
Yeah.
Yeah, I see.
Oh shit.
W.
Are we
What's
even
it
in
called?
session?
Hey?
So are we even in session?
Nah, G, this is straight discretion, bro.
That's
Yeah.
crazy. That's crazy. Nah, I'm trying to get like you. But what's it called? Yeah. The thing is, me, I'm trying to be successful. So, like, I deemed one of them, and like, he was like, his trades are crazy. Like, he makes I mean, I don't know for sure, but like, based on what he's showing, it seems like he makes a lot of money. So, like, I asked, like, oh, how much for me to learn? And then he said like a crazy number. I'm like, damn, like, that's how much it takes for me to get to that level. Or that's what I was thinking in my head. But now after this conversation, I'm probably just not even gonna like bother because like
Don't
imagine I
even
spend
think about it,
$5,000.
you know? Hey, and I'm not gonna
Yeah,
lie,
well
it
now
it does take a lot, you know what I mean? But don't think of it as like, bro, your journey might be faster or slower than someone else's. There's literally no point in even comparing. Like, but what I will say is sometimes a slower journey is better. You see a lot of guys, I think there's this one Indian guy that went on TJR Island. You can see him, he's making money already, right? Like he's actually made like I think he's made like 5 figures, right? He has no fucking idea how to trade. No fucking idea. And so what will happen
that's really
is that he has really good risk management, he has good psych, zero idea how to trade, is that he will build a false sense of confidence, right? And that you get stuck down this way worse route where now you're battling your own psyche of he has to manage to keep good psych whilst completely re-engineering the way that he trades, which is a really hard thing to do. And I think that if it takes you a little bit longer, there's absolutely nothing wrong with that. All that is teaching you is just means you've learnt more lessons along the way. So you're going to make less mistakes later on. You've learnt your lessons early. You would be better off getting this shit out of the way, getting the hard bit out of the way, and then have a consistent sense of profitability. That makes sense?
Yeah.
Yeah.
Yeah, for sure.
Completely. No, I think you got a good attitude to learning, Nicholas, and I'm sure you'll do really well. You know, it's
Yeah,
just,
thing
bro,
is-
don't even think about anyone else. This is completely your journey, and your journey is risking 1 micro for this week and taking 2 trades a day, right?
Okay.
And if
now,
you can do that,
now-
you'll be sweet. Yeah.
Now, okay, so the thing is, I still have like live account, right?
Uh-huh.
So for what would I do? Like just not trade
There's
it?
no rush, right? The live account's not going anywhere. It's not going anywhere.
Yeah, but like probably.
I know. But
like-
Nicholas, right here, this mindset, that
I
thought you
got-
just had right then
what's it
is,
called?
I know that thought you just had. You just had, but I need to make money, right? I need to do
Yeah.
this. Hey,
I really do though. Like
yeah,
I do.
but if you
Like,
do
I
that
gotta
and
help
you're
out,
trying to
man.
make money, you're gonna set yourself back. If you need to make money, you unfortunately the way that it works is you got to make money outside of trading. You can't ever need to make trading money. If you need to make trading money, you will not make trading money. So
Okay, but I have a question.
yeah,
So let's say theoretically, like I'm profitable. Like I'm not saying I am. But I'm saying let's say theoretically, like I'm profitable if I fix risk management. Like I'm saying, like let's say 2 weeks from now, like I start being profitable just if I fix my problems.
Mhm.
Like then do you think I could try going back to live if I have the pressure making money, but like when I'm in a trade psychologically it doesn't bother me. Like I'm not thinking because the thing is I'm just gonna be honest, like literally today I live traded and I didn't lose and I didn't feel like scared to lose money. Like I had took 3 trades today from like let me see from like I would say like 950 to like 130, and it was 2 wins, 1 loss, and I
Yeah.
ended up making like $100 on like a live account on Webull with like not that much. Well, I don't know how exactly that works, but like not that much leverage or whatever, like margin or whatever the heck how it works,
Mhm.
So it's not like I don't know. Basically, what I'm trying to say is like I feel like even though it's like live trading, I know usually people do live trading like after like stacking a bunch of payouts, and then that's like a sign that like the prop firm like no longer like really wants you to be using it and stuff. Like basically, I'm trying to say like I know like live trading is like the end goal, like end game for like a trader if you really want to do it, or
Mhm.
like you're forced to do because everything prop firm moves you to live. It's not like something you just do like while you're learning. I get that, but it's like if let's say hypothetically, if I have like better psych and like naturally just better like I just don't have any type of risk like type of not risk any type of what's the word like dang like I don't have the same risk management problems on live that I do on prop firms. Basically, what I'm saying.
Mm. I get
Psychologically, it's just doesn't feel the same.
I get what you
when I
mean.
trade live, I feel like way more like locked in. Whereas on prop firms, it's like I'm just like all stressed out and like about like trying to reach the profit target, and then I end up doing some like BS stuff.
I get what you
versus
mean.
Live, do one
If-
con, and then I'll just wait patiently for like 2 hours and then let my trade hit. Like,
I get what you mean.
I don't know.
No, I completely understand what you mean. So what I would say is, bro, I would genuinely try. How much like free time a day do you get?
I'm unemployed and it's summer.
Alright, so I want you to spend an hour a day, at least 30 minutes, where you go outside, right? Go outside and legit sit there. It's a weird task to ask you to do, but trust, do it, it'll work. Go
Okay.
outside and sit there and think to yourself, like, how do you want to be trading continuously in the future? Think, okay, like, this 50K, this whatever account you have, is a live account in your eyes, right? It's a $2,000 live account that once you pass it, you're paying the same thing, right? You're paying $50 for this account, $100 for this account, right? That $100 is static.
Yeah.
Whether you pass it, whether you blow it, you've put in $100. That $100 becomes $2,000 as soon as you pass it. You're trading with your money this whole time. It is live. It's your money, right? But you just need to think of it that way. Genuinely, one thing that helped me massively is I will, like, say I've had a bad day, even I try to do it when I've been on a good streak, right? Is you need that time to yourself where you can sit there in nature and you can literally just think, and you can be like, okay, what am I doing right here? What am I doing wrong? You just got to think about all those sorts of things quite deeply. There's one other thing as well, right? Is a lot of these thoughts that you have that you know to yourself are negative. You have the ability to deny a
that's
thought,
so true.
right? If you have a thought, you don't have to agree with it. Your brain is like, you are not your thoughts, right? Any negative thought you can address, like even that jealousy or like thinking that you're not as good as these other guys or whatever. That's simply a thought. It's not real. You can say, no, I disagree with that. That's a negative frame of mind. So it's just about actively trying to create a positive learning frame of mind. If you're ever thinking in a losing frame of mind or a fear or a place of fear or greed, it can't happen. So you just need to be like, be constantly at peace, like, and level-headed, calm-minded. Those sorts of things. Trading is 95% psych. So focus on the psych. Take the time to focus on the psych. Understand that, okay, this feeling of greed you're having right now, or this want or need to make money, is legitimately not real, and it's a negative thought to have. It's creating this pressure on yourself. It's making you feel like you have to do something that you don't. And really, the only way to get to where you want to be is by doing the things that you know you need to do. It's, you already know what you need to do. It's just about how many times you're going to have to sit there and tell yourself the right things over and over again. Don't even ever think about the bad things. Don't think about negatives, right? Don't think about, okay, why am I not good enough at trading? Think about, how can I be better? How can I be the best version of you? How can you, and frame it all positively. You know what I mean? If I follow my system for 30 days straight,
Yeah.
I will be profitable, you know?
Nah, what you said there is the big thing.
Yeah.
Because that's the thing. No consistency is like over, like it's like you're measuring it over a long period of time. So, like,
Completely.
yeah, but,
And it's such a hard thing to do. Like, I'm not gonna lie, it's a very hard thing to
I'll tell
do.
you something.
Yeah.